We're walking with the Lord in true fellowship. You can't censor this. We're talking about discipleship, uncompromising truth. Drop it like John the Baptist. If you don't tell them, they might never discover it. So hello everyone, welcome to Futures Talk 2, talking to Crypto Stu about elephant money futures today. Give me a hand in welcoming Crypto Stu, everyone. Woo-hoo!
Thank you. I love the energy.
Thank you. So what I'm going to do is I'm going to pin your thing. Oh no, I remember, because are you going to share your screen today?
Okay, yeah, that would be great.
So he's Scottish.
Busted.
Okay, I totally thought that you were USA. So
nope, I'm here in Scotland, up in Perth.
Oh, come on. All right. Okay, so we're in the same time zone.
Yeah.
And I've been telling you EST this whole time. I'm so sorry. Okay.
That's all right. I'm used to it.
Me too. All right. So, okay, let's pin your... There we go. And you should now be able to share your screen and take us through it. So just over to you.
Okay. Well, let's just share this. You can give me a little thumbs up if you can see my screen okay?
Yes, we can see it. Perfect.
Yeah. Perfect. Okay. Well, hi, everybody. As Nakisha says, I'm Crypto Stu, and I'm really delighted to be joining you today to share a little bit about elephant money futures. Just to be totally clear, I'm not part of the elephant money team. I would describe myself as an enthusiastic investor. I've been invested in elephant money since March of 2022. And I've been following the progress of the project really since then. But I've got so excited, that's the only word I can really use for it, over the course of this last few weeks since futures has been released, because I really do see it as being an absolutely amazing opportunity for anyone to get involved with. And I wanted to, Nakisha asked me to come on and have a chat with you all today, just to explain a little bit more about what elephant money futures is, how you can get involved, why it might be something worthwhile researching a little bit further. I also created the elephant money futures calculator, so I thought it might be cool if any of the attendees here want to run a few ideas for strategies, we could maybe have a play around with that and see what that actually looks like. So that was kind of my plan for today. I'm just an average investor, like I'm sure most of you here on the call, looking to secure my financial future by diversifying where I invest. And decentralized finance, really, I was introduced to DeFi in about March last year as well by a friend, ATX. And Elephant Money was actually the first project that I got involved with. And since then, it's been a bit of a roller coaster ride, I think is probably one way to describe it, because of everything that's been happening within the market since then. So I put together a bit of a presentation here just to kind of talk through the main points with regards to elephant money futures, but I really would encourage you to raise your hand, bring yourselves off of mute, whatever. If you've got a question, please don't be afraid to ask it, and I'll do my best to answer as we go. So elephant money futures, the new high yield cash flow engine where you can earn 0.5% per day on your BUSD stablecoins. So what on the agenda as part of this short presentation that I've put together, I want to go through an overview of what futures is. I also want to be upfront about the risks that are involved, not just the risks with elephant money, but the risks of DeFi as a whole, because I think it's really important that everyone enters this space with their eyes wide open, because otherwise we just end up making silly decisions because we start to get emotional about our money, which is only natural. So I think if we approach this with the right intentions from the word go, we set ourselves up for a successful and a much more enjoyable journey within DeFi. I want to talk about why futures is different, what sets it apart from the other opportunities that you may have heard of or that may be out there, whether that's in traditional finance or whether it's in DeFi. I want to then explain how it works, because it's really important to have an understanding of exactly, if you're putting money into a project, you kind of want to know how it works and why is it a good investment. I've talked about the risks, but there is also a huge opportunity here. And so I think it's important to highlight just the potential that we have in front of us, particularly right now. I'm actually really jealous of anyone who's really just looking into this project at the moment, because you are joining at exactly the right time where this is just picking up momentum. And, the future looks really, really bright for Elephant Money. We'll then have a look at some kind of bog standard strategies that I have come up with in the past that may give you some ideas as to how you might, if you choose to invest in futures, how you might want to play it. And then I've left some time for questions at the end, but as I said already, if you have any questions as we're going through this, please feel free just to interrupt me. I'm not easily offended. So, quick overview of what Elephant Money Futures is. Now, you had the AMA, I think it was about a week ago, where you had Bank Teller on, you had SK Crypto K, and you had Bailey from EMH, and they gave you a really good overview of Elephant Money, the system or the ecosystem as a whole. And today, I really want to focus in on Elephant Money Futures. And so Elephant Money Futures gives you the opportunity to deposit BUSD stablecoin and earn BUSD stablecoin, and you're going to earn at 0.5% per day. That in itself is massive, and it sets it apart from some of the competition, where you are potentially earning a native token to the project, and that native token is there's always going to be the risk of that token being volatile and potentially going down significantly in price. Whereas when we're looking at BUSD, the stablecoin, it makes it very easy to calculate kind of what your returns are expected to be. There's a minimum deposit of 200 BUSD, and that counts for your initial deposit, but also for any subsequent deposits. And if you do a subsequent deposit, that fresh deposit that you make will automatically compound any rewards that you have built up. And that's ultimately how you can increase your earning potential within Elephant Money Futures. You can claim the rewards at any time, and the rewards happen in real time. So you don't have to wait for a day in order to see your rewards building up. Your rewards will increase, every single second or every single block on the blockchain. You're going to see your rewards creeping up, and you can claim those rewards at any time. It is important to note, if you do claim the rewards, it will be deducted from your balance, and I'll show you what that means when we go into some of the examples. These next two bullet points are really, really important, and it's really key to understanding why this model is sustainable. 90% of the funds that you deposit, so 90% of the BUSD that you deposit goes into what we call the BUSD Treasury. That BUSD Treasury is then used to buy Elephant token and to feed the Elephant Treasury, also known as Bertha, which you heard about in great detail from Bailey the other day. And that's really key. 10% of the funds go to the BUSD buffer pool, and that buffer pool's job, its only job, is to pay the yield, or pay the interest, if you want to call it, on the futures. So, I fully expect that the buffer pool will actually be responsible for a large part of all the futures payouts, at least for the next 300 to 400 days, just with the way that the system is built. All the yield is backed by the Elephant Treasury, so if the BUSD buffer pool can't pay the rewards, then it'll be the elephant, Bertha, the Treasury, will sell elephant tokens in order to cover the liabilities of the futures yield. There's, for you as a user, there are no fees, there's no taxes. Again, that's a major selling point in comparison to some of the competition out there. You put 200 BUSD in, your account is showing as 200 BUSD. You're not having to pay taxes and fees, etc. There are referral rewards. So if you use someone's Stampede Herd partner link, then when you claim, they will receive 1% of the claimed amount, and that will be paid to them in trunk and airdropped into their Stampede. The contracts are fully audited, it's secure, it's a trustless system, so you are in control, you have self-custody. The protocol does not have access to your funds in any way, shape or form. There are some rate limiters that have been put into place, and this is to really kind of taper the effect of hyper compounding. Once you get to a point where you have compounded a huge amount more than you have deposited, those rate limiters will begin to kick in, and that is it slows the payouts that the Elephant Treasury has to be responsible for, and it's a much more sustainable long-term view. And it's not something that you need to be thinking about initially, but it is included in any of the calculations that I have given, and it's included in the calculator that I made. There are also some caps and thresholds. 1 million is the max balance that you can have. 2.5 million is the max payout that you can pull from any single futures account, and you can accumulate a maximum of 50,000 in rewards, or the same value as your futures balance, whichever is less. Now, those caps and those thresholds, if you're anything like me, those numbers seem a long way off. But you can be assured that there will be people in the community where these numbers are significant. And in actual fact, what they're there to do is they're there to protect all of us. They're there to make sure that no one single person can build an account that is so big that can do damage to the protocol. And it means that the Elephant Treasury will always be able to pay that yield. So that's a quick overview of the system. I said I wanted to talk about risks. I think it is really important for people to be aware of what the risks are within the space and within any individual project. And I mentioned in that previous slide, self-custody. So, Salali, you have your hand raised. Would you like to ask a question?
I do, if I may. Is it okay to interrupt you while you're presenting, or shall we ask questions at the end?
No, I'm quite happy to take questions along the way.
Perfect. If you could go back one slide, I want to clarify those limits, right? Yep. Would you mind running through that one more time? Because I'm seeing 50K max accumulated rewards. Does that mean once your interest accumulates up to 50K, you stop getting 0.5% per day? How does that work? If you don't mind going through that last again.
So what would happen is, well, let's just use the example. If you had $1 million in your balance, okay, at 0.5% a day, you would be earning $5,000 per day. And so after 10 days, you would have accumulated $50,000 in rewards. At that point, you will not accumulate any more. And in order for you to start accumulating more rewards, you either have to claim, so you could claim that 50,000, and then the next day you would earn 0.5% on 999,995 or whatever it is minus the 5,000. Or you could compound. You couldn't compound if you were at the million, because that's the max balance. But hopefully that answers your question. The other thing to be aware of is, say you're working with a smaller account, and you say you've got $1,000 in your account, and you do nothing for 200 days. Okay, after 200 days, if you're earning 0.5% per day, you will then have accumulated $1,000 in rewards. At that point, because the accumulated rewards are equal to your balance, you wouldn't accumulate any more. So at that point, you have a choice. You can either claim the $1,000 and walk away having made no money, or you can deposit another $200 so that your balance would now be $2,200, and then you start the process again.
Okay, that clarifies. Thanks. I have another question, if I may.
Yeah.
How do you only have $1,000 if you started off with $1,000? Shouldn't you have $2,000?
No. So because you're earning 0.5% per day, after 200 days, you will have 100%. So your rewards will equal what your balance is, and that it's your rewards that you can claim. So if you were a very simple strategy, and I'll talk about this later, but a very simple strategy, a very hands-off approach would be, do nothing for 200 days, and then on day 200 deposit another $200, and then do nothing again for another 200 days, and then so in 400 days in total you would double your money.
Understood. Thank you.
Okay, so just carrying on with where I was, the risks. So a couple of main risks that I wanted to highlight. Self-custody, which is something that I mentioned as a positive thing in the previous slide, is a positive thing because you're in total control of your money, but you're also in total control of your security. Your wallet is your own responsibility. Your seed phrase is something that you really need to keep safe. Your private keys you need to keep safe. And you need to be sure that you're interacting with trusted protocols and trusted developers. And there are so many scammers in this space that you need to be on your A game all the time to make sure that you're not falling into the traps that these scammers are putting out there. And I just wanted to raise the importance of wallet security. And if possible, use a hardware wallet, a ledger. And I think it's great that you all have this nice community that you're in, because you can help keep each other safe. You can help share best practice. One of the things that I found most daunting when I first started in DeFi was, how do I keep myself safe? How do I make sure that I am not the target of a scammer? Or how do I make sure that I'm not clicking links that could end up emptying my crypto wallet? And so, help support each other, share best practice. If at all possible, try and use a hardware wallet, which is going to keep your seed phrases to yourself, and do not put them on any electronic device. Have them written down on a piece of paper, kept somewhere safe, maybe in multiple different places. And do know that the scammers will be out there, and they're very clever. So keep an eye on each other. The other thing to mention is just general DeFi and crypto risks. So, investing in your bank account is one thing. These bank accounts are insured. The government can step in if there's an issue. DeFi is different. It's unregulated, and so we have to accept we're in this space because the potential returns are far, far greater than they would be investing in traditional finance. The risks are also higher as a result of that. It's an unregulated space. That again has pros and cons. But if a scammer does get hold of your account, you've got no recourse. You can't call up your credit card company and make a claim to be reimbursed for any money that has been stolen. So it can be a risky space. You can protect yourself by doing what you're doing, joining a community where you can support each other, and really doing some research on the projects that you do decide that you want to invest in. Projects that have got a strong background, have got a good team that are working for them. But we're in uncharted waters here in DeFi, and it's not the establishment, Wall Street, whatever you want to call it, are not going to be particularly happy if all of us are able to achieve financial freedom through DeFi. And so it's going to be constantly in the spotlight. And there's going to be a lot of false news that gets spread around the risks and what's going to be happening in the future of DeFi. So, you need to find good sources to get your information from. And the last thing is the actual risks of elephant money itself. And I think the two biggest risks in my mind are the possibility of an exploit. You know, the protocol is buttoned up really, really tight. The developer bank teller who you saw on the last call is really on the ball, but we never know. You know, we can never be 100% certain that something malicious might not happen in the future. And so that's something to bear in mind. And business continuity. So at the moment, bank teller is the one man in charge. Now, the vast majority of Elephant Money, which is different to lots of projects out there, the vast majority of Elephant Money is largely all automated. It's all written in code on the blockchain. However, there are still little elements of the project where BT has to intervene manually, such as, you know, tweaking the APR rates in the government strategies. Now, bank teller has said, I think he might have mentioned it in the AMA with you guys a week ago, that one of his main focuses now is that business continuity and putting plans in place so that this is less of a risk than it might be in its current state. And so with all that being said, you know, I think the sensible approach is it's very easy to say don't invest more than you can afford to lose. And that's probably quite difficult for us to actually get our heads around, because no one likes losing any money. But, you know, you should be investing amounts of money that are not going to put you in financial difficulty if the worst was to happen. And that's the case for any investment, but it's particularly so here in decentralized finance. So we've got the risks out of the way. What makes futures different? Why do I think, you know, as an investor myself, why do I think that this is, you know, why am I putting my money here? 95% of my investments are now in Elephant Money. Why do I get that confidence to do that? Three things at the top. So number one is the developer, bank teller. He's an MIT graduate. He has a background in fintech and finance. He has developed systems that literally have trillions of dollars going through them each and every single day in the Forex market. And so, you know, if I'm investing, if I'm putting my hard-earned money into a project, I want the developer, the man in charge, to have the relevant background. And there's so many projects that are out there in DeFi where that just isn't the case, because literally anyone can set up a project. Anyone can set up a project and really kind of fleece you. So bank teller, he has been around. Pretty much everything that you have seen in DeFi has stemmed from something that bank teller has created in the past. And that, for me, gives me huge confidence. The second thing is the community, the Elephant Money community. So on Telegram, there's, you know, 10,000 people in the community, and we've had a rocky year with the exploit in April. We have had a rocky year, and the community has stayed strong. And every single step of the way, they have supported BT. They supported the project. And I think that of all the communities that I've been involved in, the Elephant Money community is probably the and, you know, I think Ged is here on the call. A large part of the success of the community, I think, has to be given to him. He has kept everyone motivated when times have been tough. And so, you know, from me to him at the moment, just to say thank you for doing that, because the community is such a large part of our investments here. And I find comfort in the fact that we've got such a strong community. The Elephant Money attracts smart investors. There's no way to kind of skirt that fact. There's people who have huge amounts of money. That doesn't necessarily make them smart, but there's people who are willing to commit a huge amount of money to Elephant Money itself. And there's also a really strong community of individuals who are out there to support it, to provide tools and resources, whether that's in terms of making videos or writing articles or creating tools and calculators and all of these things. And Futures itself, this final product that we're talking about today, was an idea that BT had. And that idea was then discussed with the community, and the community then shared feedback on, you know, what they saw, what were the pros, what were the cons of this, and between the knowledge that everyone holds within the community, we see this final product, which, you know, is why we're here and what we're talking about today. The other thing that makes it different is this isn't just another ROI DApp. Now, I don't know how familiar you all are with DeFi, but ROI DApps were kind of the hot craze in 2022. And, you know, it's fair to say that most of them are really, really struggling at the moment because they have been beaten down with a bear market, and the combination of people being able to hyper compound their balances with a native token just results in one thing, and that's the spiral, the downward spiral of the price of the token. And so regardless of how big your balance is, your daily rewards aren't worth very much because the price of the token has dropped so dramatically. And so, you know, that's one of the key benefits of that BUSD in and BUSD out. But beyond that, and probably more important than that, is just the sheer size already of Elephant Money. It's the 9th largest holder of BNB on the Binance Smart Chain. It's got liquidity that cannot be forked. Okay, so you could have a protocol come out and see futures and think, yeah, I like the idea of that, let's make a copy of that. But no other protocol has the resources that Elephant Money has. And those resources are only going to grow, as I hope that you gathered from the presentation from Bailey last week, in terms of how Bertha appreciates in both size and value over time. And if we've got questions on that, I don't know it as deeply as Bailey does, but I'm happy to talk about that in a bit more detail as well. Time is another really important factor with Elephant Money futures. So as I've explained, 200 days, okay, so if you earn 0.5% per day, in 200 days, you've earned 100%. And so the protocol has a huge amount of time for Bertha, the Elephant Treasury, to grow before we're going to see significant withdrawals from the system. And that time is a huge factor, and a huge positive that I see anyway from Elephant Money futures. The fresh deposit. So if you want to compound in Elephant Money futures, you have to make a fresh deposit. You have to put in that $200, and that ensures there's a consistent flow of new money coming in. Gone are the days where, you know, we thought we could put $100 in and then in a year take out $1 million. It's just not realistic. It's not going to happen. And so with Elephant Money futures, we're forced, if we want to actually profit from this system, we have to keep investing our money. And that is how it should be. You know, think of it like, I think BT, you know, uses a similarity of running a little business. You know, if you want to grow your business, you need to reinvest some of your capital in order to make that business grow and scale. And it's exactly the same with Elephant Money futures. And it's a small price to pay for the awesome returns that you can achieve within Elephant Money futures. So how do you use Elephant Money futures? As I've said, the minimum deposit is $200. Your rewards will then start immediately. So as soon as you press that deposit button, you're going to start seeing the rewards coming in, and those rewards will accumulate every single day until we reach those thresholds that we talked about earlier on. And if you claim your rewards, they're deducted from your balance. So for example, if you deposit $1,000 and you build those rewards up for 30 days. So you're earning $5 a day. That's going to be $150 after 30 days. If you were to claim those rewards out, your balance would go down to $850. And then you would start earning 0.5% on that $850. And so you'll very quickly realize that in order to actually make money, in order to profit from Elephant Money futures, you have to, at the very least, make one further deposit of $200. That's what's going to take you into that profitable territory. However, it was built to be used very much like how we use a savings account. It's like that regular, how much money can you afford to invest on a monthly basis or a weekly basis or a daily basis, and you put that money into Elephant Money futures, and over time you allow that to grow, you accumulate the yield, you recompound it back in with these fresh deposits, and you get to a point, you know, set yourself a target, whatever that target might be, and then once you've received that, you can choose to either, you know, take a big payday, or you can choose to start paying yourself a passive income. And so to give you an example of the kind of compounding, let's say you start with $1,000. After 30 days, you've got 150 in rewards. If you deposit another 200, your balance then goes up to 1,350. That's the $1,000 you had originally, plus the 150 in rewards, plus the 200 deposit. And so now you're earning 0.5% on 1,350. And so after the next 30 days, you'll have $202, $202.5. If you deposit another $200, your balance is now 1,752, etc., etc. And you keep doing that until you achieve a balance of your, you know, of whatever you're looking for, and then you can start to either claim out or however you want to approach it. And we can have a look at that as we go into the strategies next. So we talked about the risks. The opportunity is, as I said at the beginning of my session here, I'm quite jealous at the timing. You're joining this, or you're potentially joining this protocol at possibly the best time. There's been some real milestones have happened just today. So the Elephant token itself has just managed to break the all-time high between the exploit and now. And that was September. So we're now at a higher price than we were back in September, and that's the first time we've seen that since then. And the Elephant Treasury has just hit 110 trillion, which is absolutely huge. You know, that's since futures has launched, the Elephant Treasury has grown by about 11 trillion, I think, which is, you know, that's over 10%. That's massive, and it's only been going, you know, a week and a half there or thereabouts. So we can already see that this is beginning to work, and you know, that gets me really excited. Futures is highly flexible, and it provides huge opportunities for you as an investor. And you can look at it through various different ways. It could accelerate your retirement, it could replace your income, or maybe you just want it to subsidize your income. It can provide that passive income stream that you can have going alongside whatever work you already do. For me, it's about financial security. It's about knowing that I can comfortably pay my bills and I can look after my family. That's why I'm investing in Elephant Money futures. And the product itself is so flexible. You can really create a strategy that matches your goals. What do you want to achieve from the system? What is your risk profile? You know, are you quite conservative, or are you happy to be a bit more aggressive? And that's something that we can have a look at when we start to have a look at the strategies. Maybe you just want to build up a huge balance and have this massive payday at one time. Maybe you want to achieve passive income where you can start to think about scaling back the amount of work that you're doing. Maybe things change 2 years from now and you need to pivot, you need to adapt, and futures gives you that flexibility to be able to do that. You're not committed to running the same strategy as what you do when you start. You can change your mind as you progress through it. And so a couple of really straightforward examples that I thought that might go down quite well with this community. Number one is the monthly saver. So, you know, I accelerate your retirement essentially is kind of how I've themed this one. If you deposit $200 today, and then you continue to deposit $200 every month, after 2 years, your balance would be 42.5K. After 3 years, your balance would be 207,000. So we're starting to see the power of compounding. essentially, if you're depositing monthly, weekly, you're looking at around about 5x, 5 timesing your balance every year. And so in year 4, you're talking, you're at that $1 million balance mark, the max account. And that doesn't take long. And that's just a $200 deposit and $200 every single month. Okay. When I first got into Elephant Money, I have to admit that I was slightly off put by the huge amounts of money that people were talking about. I was seeing deposits coming in for $5,000, for $10,000, for $50,000. And at that point, I just wasn't, I didn't have the capital, and B, I wasn't willing to commit that capital to the decentralized finance. And I found, that a little bit off-putting that there were all those big, whales within the space. And I can assure you that Elephant Money Futures is a level playing field. That's what's so beautiful about Elephant Money as an ecosystem as a whole, because Bertha is the biggest whale, and Bertha can't dump on us. The largest elephant token holder only holds, less than 1% of the supply. I think it's about 0.8% of the overall supply is held by one person. That's quite different to what you would expect to see in other projects, where these big whales have a huge amount of control as to what happens with the price of the token. And so Elephant Money is a level playing for us all. So this can be a good move for us, whether we're coming in with $200 or whether we're coming in with $100,000. It makes no difference. We've got the Treasury that's backing it. A second strategy, which might be, someone that is looking to replace their income, doesn't necessarily mean you need to quit your job or anything like that, but having double your income coming in every month, I don't think any of us would complain at that. So to do that, in simple terms, if you can deposit 10% of your monthly salary, sounds, quite a lot, and it, possibly is. Maybe it's too much, but work with this for the numbers. If you can deposit 10% of your monthly salary, and you can keep doing that monthly until your balance is 20% higher than whatever your salary is at the moment, and that's going to take roughly 21, 22 months, you can then switch to a schedule where you claim 1 week and you deposit another week, and you'll be earning roughly the same amount of money as you're being paid in your salary at the moment. So, less than 2 years, if you can put 10% away every month, in less than 2 years, you can equal your salary. So I was going to have a look now at the calculator, but I'm conscious I've done quite a lot of talking. Are there any questions so far?
Sorry, me again.
No problem.
On your second strategy on income replacement, are you talking 20% greater than your current salary in months or in years, or does it not matter?
So let's say you currently earn 50,000 a year. Okay, you'd be looking to achieve a futures balance of 60,000. That's just 20% more than the 50,000.
Got it. Thanks.
And there's just the way that it works out with the 0.5% a day. It needs to be about 20% higher than your current salary in order for you to be able to claim that amount every month, at the same time as still growing the futures account in a slow fashion.
And of course, you have to keep up the deposits in order to increase your balance for the compounding effect to work and to claim the rewards.
You would do. But remember, at that point, you're then claiming, every second week. And so you could use a portion of the amount that you're claiming to then pay for the deposits.
Yeah, absolutely. Great.
Any other questions? Okay. While we're doing that, can you see the calculator now, folks? You could maybe just give me a quick thumbs up. Yeah, okay, thank you, Elizabeth. So this is the Elephant Money Futures calculator that I put together. Some of you may have already had a chance to have a look at this, but I thought this was a really good opportunity that you can to see the power of the numbers. I see a question there from May coming in the chat. Is there a limit to how many accounts that you can have? No. You know, because crypto is anonymous, you know, it can't be kept track of how many wallets someone has, and so there's no way to implement that. So you can have as many accounts as you would like, but bearing in mind that every single futures account you have, you need to pay that $200 deposit anytime that you want to compound, and that adds up. So that discourages you know, people setting up multiple wallets. So the strategy, or sorry, the elephant money calculator here, if you aren't familiar with this, it's really straightforward to use. It looks quite complicated. I've tried to make it as user-friendly as possible. There is an instructions tab. I also have created a video. Now it's not actually linked on this sheet here because this is my copy, but on the main public copy that I have made, there is a YouTube video where I go into detail, so you can always refer back to that at a later date. But essentially, I'll quickly run through maybe a couple of the strategies that we've already discussed there. So if you were to deposit $200, that's your first deposit, then thereafter, you're going to be depositing $200 on, if you're wanting to deposit, if you want to compound, I should say. So then the frequency of that is where you would click this drop down list. Now you could do that monthly, you could do it a weekly deposit, you could do a bi-weekly deposit, and bi-weekly in this sense is every 2 weeks, it's not twice a week, just to clarify that. So let's just stick to that monthly deposit. And in here, we are going to try and build, we're going to deposit every single month until our futures balance equals $100,000. Okay, now that's, you know, that's a huge growth. So it's going to take a little bit of time. And then once we've hit that $100,000, we're going to go to switch to a schedule where we alternate weekly. So 1 week we claim our rewards, and the next week we deposit a fresh $200 in order to compound our rewards. And as you can see over here, this is the blue line on the chart. We can see it takes us up to, what are we here, about month 31 by the looks of things. So 31 months for us to grow this initial deposit of $200 plus our monthly deposits of $200 into $100,000. And thereafter, we can then essentially passively live off of alternating weekly. If we scroll down, we can see the numbers in a bit more detail here. So over the life of over 3 years, we will have deposited a total of $8,600, you know, every single month, depositing that $200. And we hit 100,000 on, you know, it's in between month 31 and month 32. And at that point, you know, our rewards, we're making, you know, nearly $500 a day. At that point, we will probably have just gone into the first rate limiter, so we won't be earning quite 0.5% per day. At that point, we would maybe be earning 0.45% per day. This is the limiters that I was talking about earlier on to stop hyper compounding. So that's one strategy. The second strategy here is the income replacement strategy that I was talking about, and I was using an example of a $50,000 per year salary, which is roughly $416 per month. So if you do your initial deposit as the 416, and then ideally if you can do, you know, $208 twice a month, you're going to benefit from the, you know, a bit more compounding by doing the twice per month compounding than you would do with just one deposit per month of 416. And then we build that up to 20% higher than our current salary, so that's $60,000, and then alternate weekly. We can see that it takes, you know, 21 months to hit that $60,000, and then at that point we'll be earning, let's just jump into the strategy and have a quick look. We scroll down. here. So twice per month, we'll be claiming about $2,200. So that's 4,400 per month, there or thereabouts. So it's actually slightly above our 4,160 monthly salary. So, excuse me, grab a drink of water. So there's so many different ways that you could potentially play this. One of the most passive ways would be the double in 400 days. So, you know, perhaps you want to put a bit more money in at the front. Let's say, I don't know, $5,000, and you're going to double in 400 as the strategy that you want to have a look at. And you will see here, in a second, taking a while, that, you know, month 12, we basically get that $10,000 back from a $5,000 investment, and we only have to make 3 transactions: the initial deposit, the deposit at day 200, and then the claim at day 400. So a really easy passive way to double your money. Now, I'm not suggesting that that's the best strategy. I actually think that, you know, a strategy where you're growing, the way I'm using this is more as a savings account, and I'm just putting a little bit of money away every single month, and the hope that in 2 years, 3 years time, you know, I've got a significant amount in there that's going to, you know, secure me financially moving forward. So what might those strategies look like? Well, you could do, let's say you did $1,000 as an initial deposit, and then committed to doing $200. You could do a strategy, something like do nothing for 2 weeks. Then after 2 weeks, you will you'll deposit, and then after 1 further week, you claim. And so you're constantly pulling a little bit of money out of the system along the way. So this is a bit more of a conservative approach. And you can see that you're going to start, this is the red line, you're starting to claim money out of the system from the word go, you know, from 3 weeks in. And so, you know, it's probably it's more conservative than just, you know, aggressively building your balance every month, but it's, you're still benefiting from that compounding with the 2 weeks where you're doing nothing. So I would encourage you to have a play around with the calculator yourself. There has actually been another calculator that has been created by a member of the community, and this is what I'm showing you on the screen now. This is a web-based application. It's maybe slightly more straightforward. So if you aren't great with spreadsheets, or you find my calculator confusing, then you could maybe start by having a look at this other futures calculator. It isn't as flexible. It doesn't allow you the same options, and it doesn't have the graphs and things, but it is a really good start if, you know, big spreadsheets make you nervous. And, you know, I think, you know, we're coming towards the end of what I wanted to share with everyone, and I hope that I've given the futures product justice. I really do think that this is such a fantastic opportunity. If we just quickly have a look at the Elephant Treasury, because remember that the Elephant Treasury is what is paying, it's the backstop for paying the yield. And the Elephant Treasury, you can see here that this purple area on the chart, and you can see the significant impact that futures has already had on the growth of the Treasury. This is, we can see on the right hand side of the chart there, the big difference, and it's, you know, it's supercharging the growth of the Elephant Treasury at the moment. It's a really exciting time to get involved. And we've got the elephant chart here. We can see this was the latest, or the high of September, which we have broken through just today, which is fantastic news. The momentum is really building. You can even see it in the Telegram chat. You can just see that people are starting to become excited about this. And, you know, the synergy that I think that exists between the futures product and the elephant token is just, you know, it's masterful financial engineering, because, you know, we deposit in futures, which feeds the Treasury. The Treasury is then responsible for paying the yield in futures, but the growth of the Treasury will outpace the debt of futures. You know, for example, I think in this last couple of weeks, the Treasury has grown about 5 million in value in comparison to the just over 1 million that has been deposited in futures. So if you're asking yourself about, you know, is this sustainable? Does this sound too good to be true? I would say that that's the answer. That's what you were looking at. The elephant Treasury and the elephant token itself is this beautifully designed system that is going to, mathematically, it's going to appreciate in value over time. Now, that's not to say that there aren't going to be periods of ups and downs. There will be, but what will happen is the floor, you know, will keep rising over time. And there's huge potential with the elephant token. So, you know, not financial advice. None of what I've mentioned today is financial advice. I'm just a regular guy off the street. But, you know, if you're looking into the elephant money ecosystem, grab a little bit of elephant token, you know, because that's your share in the company, in the community bank. You know, if you want to be yeah, off the Scottish streets, if you want to be a part owner of this community bank, then pick up some elephant token and then help that elephant token by and your own future through investing in elephant money futures. And I think that is pretty much everything that I wanted to cover. So happy to answer questions if we've got any.
Don't be shy, ladies. Have you got any questions for Crypto Stu?
Lisbeth.
Yes, hi, beautiful presentation. I really appreciate your time greatly.
No problem.
My question was, when you say like big payout, does that mean not claiming rewards, but just letting it compound and not taking anything out at all?
Yeah, so if I just jump back into this calculator here, so essentially, if we look at this first strategy here, I'm going to change this ever so slightly. Let's imagine we invest 5,000 to begin with, and whatever amount you really want to, and we build that up by depositing weekly, monthly, you know, every couple of weeks, and we get to our deposit of 100,000. What we could, or our balance of 100,000, I should say, what we could do at that point is do nothing for 200 days and withdraw $100,000. That's what I mean by a big payday. Or the alternative to that is to follow a strategy where you're taking out little bits at a time, and then you're maybe reinvesting some of that so that you continue to grow the account.
Got it. Thank you so much.
No problem.
May I ask another question, unless someone else has one?
Yeah, please do.
Yeah. Crypto Stu, I'm asking again about limiters. You had a 2.5 million limit on payout. Can you expand on that?
Yeah, so let's say your balance, you've managed to accumulate your rewards, and ultimately you end up with a balance of $1 million. Okay, from that point on, or really from any point, the total amount of money that you can claim from any single wallet is $2.5 million. So does that make sense? Do you need me to explain it further?
It does. It just means if you keep adding 200,000 and compounding, you can't claim up to a point. Or does it actually restrict you from adding more money into the balance?
So the $1 million cap, that would restrict you from going above that. So you couldn't go above the $1 million. So let's say you had $1 million and you claimed out 50,000. At that point, you could then make a deposit and start building it back up towards the 1 million. And so you could keep doing that essentially until you've claimed out a total of $2.5 million.
I see. Okay. At which point it must then stop you from making further deposits in, right?
Yeah, that would be you know, that account would be finished in that respect, and you would need to start again from scratch.
Got it. But then again, the workaround obviously is to just create multiple accounts.
Yeah, you can, you know, along the way, as you're building your bag, you could start creating more accounts along the way, for sure.
Thank you.
No problem.
Does anybody else
Elizabeth?
have any questions?
Did you call my name? Sorry.
Oh, sorry, I think you were maybe just sending a thumbs up rather than a question.
Oh yeah, I was just saying thumbs up because I had the same question as the lolly, but I had forgotten. So you answered that.
No problem. Nikisha, how about you? Do you have any questions or anything you want to add?
No, because actually Liz, Salali, they asked questions that I was thinking, and I was like, oh, this is good. So I got my answers that I was looking for, basically. But yeah, what part of Scotland are you from?
I'm from Perth.
Oh yeah, you did say that. You did say that.
Yeah, okay. About an hour north of Edinburgh.
Okay, yeah, I've been to Edinburgh, and I was an hour outside of it, but I don't think it was Perth. Yeah, so
it's not that memorable. You probably wouldn't remember it if you had been here.
I've traveled all over the UK, playing music. What is that?
Kakia, as you have your hand raised.
Yes, I was just curious. What does the withdrawal process look like? Like when you claim the money and all of that?
So it's really straightforward. Let me just see if I can load this up. So I was trying a new wallet out, and I thought this might be a good opportunity to give it a try. Okay, so this is the futures dashboard on the Elephant Money website. In order to deposit, you would just click the Your Future button here. You would then need to approve the BUSD in the contract, and then you would then go in and deposit your rewards. So this wallet that I've got, unfortunately, doesn't have any money in this futures account, so I can't show you what a withdrawal would look like. But you would, this button down here, you would press that, and then there'd be an option to claim. Then you approve that transaction, and then the money goes straight into your wallet for you to do as you please.
Okay, thank you.
I think just while I've got the website up here as well, something that's really important to take away from here is I mentioned earlier on that 10% of the funds go to the buffer pool, the BUSD buffer pool. So we can see here that there's 110,000 in the buffer pool at the moment, and the daily liabilities are only, you know, just 5,500, and that's what people could potentially claim from the system. That isn't what is being claimed. The reality is that number will be a lot less, and so time was one of the things that I mentioned was a differentiator between this project and some of its competitors, because ultimately that BUSD buffer pool is going to be able to manage the liabilities of the futures contract for a long time. You know, it's going to be at least, you know, I reckon certainly beyond the 200 days before we really have to start looking at the yield being covered by the Elephant Money Treasury. And even then, a large proportion of the yield will still be paid through the BUSD buffer pool. So it's another tick for sustainability in my mind anyway.
I think another key takeaway here is to understand how the way this protocol works differs from traditional finance. So I think people need to realize that you do need to babysit this. If you just put in an initial deposit and do nothing, when you look to withdraw, all you can withdraw is your initial savings amount. So you do need to put in the 200 periodically to see the appreciation, to be able to gain access to your rewards. I think that's quite key.
Yeah, I think you're
from what you'll see with traditional payout schedules on savings accounts. The other thing I did want to ask, if there are no more questions forthcoming at some point, you did mention that there are different ways that Bertha grows. I know you're not the expert on this, SK Crypto probably is, but if you have a couple of minutes, it might be worth just walking through that for us. More information.
No, absolutely. I'll explain it to the best of my ability. But essentially, Bertha will grow through. So every time someone buys or sells the elephant token, there is a 10% tax, and that tax goes to Bertha. So she's, regardless of whether people are buying, whether they're selling, whether they're transferring, Bertha is always just eating up all of those taxes. And that, for a start, that helps her grow. On top of that, we now have futures. Okay, so when someone deposits into futures, 90% of that deposit is then going to be used to buy the elephant token, and that is going to fund Bertha further. We also have the graveyard, which I'm not sure how much detail was spoken about the graveyard, but the graveyard holds at any time at least 50% of the overall token supply, the elephant token supply. And so it's allowed to increase up to 51% of the overall token supply. And as soon as it hits 51%, it sells off elephant token and redistributes those tokens to all the elephant holders, and the largest of which is Bertha. And so she benefits from that redistribution of the graveyard. And so the protocol own liquidity, which is currently sitting at about 60%. So if we have a look at, this is the elephant token, and this is the holders, and we can see these first four accounts here, the 50%, 11%, 11%, 7%. These are all, well, they're all protocol, they're not all protocol owned. The Pancake Swap pools, I don't know if we could describe those as protocol owned, but at least 60% of the elephant tokens that exist are owned by the protocol. And what's going to happen is because Bertha, gradually just grows bigger and bigger and bigger, she is going to then, all of a sudden she's going to be the second biggest token holder, and she will continue to grow. And that means that the rest of us have to fight and squabble about, a reducing amount of tokens. That's for the supply shock, because of scarcity. So if you think about, this like in a pie chart, the graveyard plus the Bertha, the elephant treasury, will gradually will start to eat up more of that pie, and that's where the real beauty of this system comes into play. And then on top of that, and this is not insignificant, is that because of that supply shock, supply squeeze, and the appreciating price of the asset, naturally people want to hold on to their elephant tokens longer, and people start noticing the elephant token, and then you end up with a chart that looks like this, which is what we experienced back in March last year. And this is what we're fully expecting to happen. It may not be quite as severe and as vertical as we saw the last time, because we've got deeper liquidity now. We've got two deeper liquidity pools, the BNB pool and the BUSD pool. And so it may not be quite as extreme, but this is what we're beginning to see happen if we you can see it's happening. You can see it on the chart. Look at this area of price action here and compare it to this area of price action here. This is the time to get in. I really do believe that. Does that help, Salali?
Absolutely. I just wanted to add that so the curve may not be as steep going up, but the reason why I guess it capped up at the top there was that the exploit.
Yeah, so there was a couple of things happened, which was, it was unfortunate at the time, obviously. This first big red candle, what happened, and I remember it, there was a scam that went around the Elephant Money Telegram, and there was like fake airdrops that happened. And, all of a sudden that was a coordinated attack, and they managed to compromise a big amount of wallets, and then they sold off the tokens. And so that was that initial red candle. And you can see that, the system did what it's supposed to do, and it bought that back up. And it was starting to increase again when, unfortunately, we had that malicious exploit. But the exploit was, don't get me wrong, it hurt. It hurt my own investment considerably. It did give me an opportunity to buy it in again at a cheaper price, because I think I bought in somewhere around here, so it was already quite high. So it allowed me to get in at a cheaper price, and it allows all of you to get in at a cheaper price. But more importantly than that is it highlighted certain areas of weakness in the protocol that BT has spent a huge amount of time now making sure that all those gaps, all those holes have been filled within the system, and that it's now a much more secure protocol than it was in March of 2022.
Excellent. So barring any further exploits, which of course no one can predict, that curve may go up on a gentler slope, but then we can expect that it shouldn't come down dramatically again. So essentially, whenever you're holding an elephant, that value would stick, because Bertha, if people decide to take profits, right, the curve will come down, but then Bertha will keep going to push it back up.
Yeah, so the job of the Treasury is to gradually increase the floor price. That's what it's going to do over the long term. So it still allows people to speculate. It still allows people to buy low and sell high, and people can still make a profit doing that. But the kind of the overall trend and direction is it's designed to go in an upward fashion. That doesn't mean to say you're not going to see down days and days where, maybe even multiple days where the price goes down, and where it's also, it's linked to the price of BNB. And so, we're benefiting as well at the moment from an increase in BNB price. If BNB starts to go down, then we might see the elephant token going down. But what will ultimately happen over the course of time is that we'll start to see the elephant token price action remove itself or decouple itself from BNB price action.
That's with more people buying in, with more demand. Yep. At the moment, we're also, I guess, linked to BTC, just because everything in crypto is linked to BTC.
Yeah, well, BNB is linked to BTC. Yeah. Everything is linked to BTC, really, in some way, shape, or form. But because of the design of the elephant token, we can begin to decouple ourselves from what's happening in the rest of, the economy. Essentially, we don't know what's going to happen in the economy coming forward, and there's lots of uncertainty. However, and that's why I'm willing to kind of place my bets, I suppose, if you like, with elephant money, because I can see that it can weather that storm probably better than any other financial instrument. And we've seen that in 2022, even despite the exploit. If I zoom out here, if you ignore this huge run up and run down, you can see that we're just in a nice steady rising trend. What other price chart can you look at the moment that can say the same? The system works. It's fantastic. Okay, well, I guess if we don't have any further questions, I'm happy to take any more if they come. But I think that is me finished for. I think I've said everything that I wanted to say. I hope that you have all found this useful. Feel free to reach out. I'm sure Nikisha can share my Telegram details. If anyone has any questions and you want to get in touch with me directly, more than happy to have a chat with you in DMs or however you want to do that. And please play around with the calculator, because it really will open your eyes as to how this system works.
That was great, Crypto Stu. I have your calculator. I've been playing around with it. It's great. Are you willing to share your presentation as well?
Yeah, absolutely.
Perfect.
I will send that to Nikisha and she can forward it to the rest of you guys. I'll probably just share it with the rest of the Elephant Money community as well.
Excellent. Thank you so much.
Okay, thank you.
Thank you so much, Stu. That was incredible. Yeah, just thank you so much for your time and for your brain. That was
No problem
really
at all.
helpful. Yeah.
I enjoyed it.
Oh, good. We can get you back.
Yeah.
Awesome.
Anytime. As long as
Alright.
I'm not working, I'm happy to jump on.
Okay, awesome. Okay, ladies, if no further questions, then we just bless Crypto Stu on his day. And we just thank him again. Thank you so much, everybody. Yeah, if nobody's got any other questions, then we'll just end it there. All right. Okay. Okay, welcome everyone to our talk, first of many, I hope, because this is an exciting venture which we will be growing together and learning together and just making some P31 moves. It's going to be a thing, Liz. It's going to be a thing. So I have invented a new lingo called P31 for us in this Web3 space. And P31 is Proverbs 31, right? But we need to like keep it snappy, keep it cool. So we are P31 movers and shakers right now. This is a move for the women, for the daughters of Yah, and that's how we are rolling, fam. All right? Okay. Fam is also, if fam is not used in the Web3 space, we're going to be bringing fam in there as well, because fam and P31, that's some lingo that we can start to make our own in this space, because that's how we move. All right, so we have got a couple of people to speak to you to start us off today, and it's not me. We have Bank Teller, who is the developer behind Elephant Money, and we are absolutely honored to have you here to come and speak with us today. It really has made my day today, and we're so excited to have you. And we also have SK Crypto, and he is here to speak to us as well. He and Bank Teller have been working together for a long time, I believe. He told me earlier that they were OGs. He's OG with Bank Teller. They need to use our lingo. They're fam. Do you know what I mean, fam? They are fam. So, yes, hey, here he is. So over to you, basically. I'm going to see if I can pin your... Yes, there we go. So over to you. We cannot hear you. I think you're muted.
I'm muted. Sorry, there. Better?
That's better. Perfect.
Yes.
Okay. Is it after? Well, I guess it's all different time zones, is it? Okay,
Yeah.
great. Well, good morning, good afternoon, good evening, all that good stuff. Yeah, I had a chance to talk earlier in the day with your esteemed leader. Yeah, but no, it's great. It sounds great what you guys are doing, and I think there's going to be some really good synergies here, because Elephant Money is all about empowerment for everyone, and empowerment comes from really community. And the community that we're trying to link up is everyone together, not a particular group, not pockets here, pockets there. Literally everyone. So the economic engine works because it allows everyone to participate together as a single collective, as a single global community bank. And so and through that, things like, it's more about action instead of charity. You know what I mean? Pretty much people can participate in this at any scale, and you can also help each other. So we have a concept of each one teach one, and so we grow organically, and it's very exciting whenever we get to meet people with enthusiastic endeavors, where they can easily see how elephant money can fit in as a tool to allow them to achieve, their goals. And I'm a Christian myself, and so I think that I just very excited about what Nikisha has told me about your community. And I think really I'm just here to answer questions. I can tell you a little bit about my background, but I don't want to spend too much time on it. And I think maybe many of you probably already know a good bit about it anyway. But essentially, I've been doing software since I was 10. Been doing finance for over 25 plus years in fintech. Building systems for mainly institutional firms like Fidelity and State Street. I know many of you have heard the Fidelity name before. So I really get this, and I've also reported like one level down from Abby Johnson. So I've learned not only finance, but I've learned it in a very ethical environment, in an environment where we really value and appreciate what we need to do as fiduciaries, and in terms of protecting wealth for the long term for communities and individuals. So I think I was pretty much, I heard the story about how you guys found me, and I didn't necessarily know throughout my whole career that it was leading up to this, but it all kind of makes sense now. It all kind of makes sense how we all ended up here together. So, but yeah, let me just explain for those who are might be super new to Elephant Money what it's all about. So it's a global community bank. We basically have the Elephant token, which is on our back end. That's the store of value. You can think about that as similar to like Bitcoin or something like that. That's the thing that's going to appreciate in value. When you join the Elephant community, affectionately known as the herd, you're going to want to, pick up some elephant. You can pick up, it can be $500 worth, $1,000 worth. It could be whatever you want, 200, doesn't matter. It's going to grow exponentially. If you looked at the chart, that's kind of what it's designed to do. And we could talk about how that all works a little bit later, but it's important when you join that you definitely establish a piece of that, because and get a piece of that. And the reason why is because everything is designed around adding value to our treasury, which pays out all the yield for our front end office, which is sort of like, looks like savings accounts. So Nikisha mentioned the futures product that looks like a savings account, and it offers very high yield, 0.5%. So you can use it to augment cash flow and supplement your business or supplement whatever endeavors you have, and multiply that by incorporating that into your your financial bookkeeping. But you want to definitely go with elephant as well, because we're currently in our double, so we're basically going back up this sort of parabolic curve, and things are going to get pretty exciting pretty fast. A lot of people who might have left the community after we had our exploit in April are coming back. So we basically buttoned up everything. There was a flash loan attack that sort of tested our mettle, but that was good because it allowed us to plug a bunch of holes, get a fresh set of eyes on things, and really make this system bulletproof. Even after the exploit, happy to let you guys know that Elephant was the best performing asset of 2022 out of the top 100 digital assets in existence. And that includes the stock market and the Dows and all commodities as well. So we were up over 100% for the year while everything else was down. And if you look at the chart, it literally, it sort of glides, goes parabolic in March to April. Then we have the exploit. The system protections kick in, so we don't go to zero. And then we just glide and start going back up again. And then when I release futures, which opens up the front office again, we just start going parabolic again. So we've always, if you just cut out like the exploit, it just looks like a chart that's just always going up. So very happy about that. But it's not just going to just be a chart that goes all the way up. It's actually going to hockey stick again, which is going to be kind of insane. So this technology has never existed on the planet before. So yeah, I invented it. So what else? Oh yeah. So I think I left out that I'm a MIT computer scientist as well. So I have a concentration in artificial intelligence and computer graphics, and also a former chess champion. And what else? And I have a business degree. Doesn't it sound like stacking the deck? But doesn't it have to make sense, right? Doesn't it have to make sense? Like, didn't you have to dream about elephants to find this in the first place, right? Like, just letting you know. Like, you see how crazy this is? You see, like, this is biblical. Like, it feels very, like it's kind of crazy, and very exciting. And so, and I feel like this right here, like as magical as it feels for you, that's how it feels for me. Because what do we need? We have the technology. We have the system that works. It's already performed with one arm tied behind its back. But it's not interesting when there's only 40,000 holders or participants in the system. That's like, what did you really do? But we also have almost no women in our platform, right? But doesn't that all change once we actually add the real catalyst for community? Right? Aren't women and families the real catalyst for what we're doing here? Isn't this meant to serve families? And isn't the heart of a family a woman? So and I guess and I'll speak personally, as a Christian, I very much do believe in families. I believe we have families in crisis right now. I believe that there's like so many forces at work tearing families apart. And wouldn't it be great if economics wasn't one of those things anymore? I personally think that the state needs to get out of the way of the family. I think that the church needs to get more involved in the family again. We have to double down on building families. And that's and the first thing we need to do is I think if we can change the economics of society, then we can focus more on the family. I mean, we have, things like Chat GPT, which has basically democratized AI, but it's not a good look. It's kind of scary. It's taking away, for many stay-at-home moms who are still participating actively in the economic generation within the family, or you could be a single mom, or even if you're married with your husband as well. Maybe both of you are working from home. But what does working from home mean? It means doing jobs that are connected to the computer. But what does doing a job connected to the computer mean after Chat GPT? It gets very scary very quickly, and we have to have an answer for this. So I wasn't just building any financial platform. This thing is built specifically for regular people. Even, if for you that have had time to get involved and have actually played with Elephant already, that it's very simple. Like it's just a checking and savings account. The way you work with it, it's that simple. Why? I could build more complicated things. I have a foreign exchange trading system that's still running today. Does $1 trillion in volume a day at State Street. So, and I wrote that over a decade ago, still running. Why? Because I saw this coming. Like, I was an early investor in AMD, and AMD is responsible for a lot of the microchips that are used now in artificial intelligence to mimic neurons in the brain, and saw that work coming a mile away. And then when their current CEO started to double down, that's what it got scary. Like, so for example, Tesla, you're basically sitting inside a little insect brain on wheels, and that's all powered by AMD chips. So anyway, this is here to solve both pieces of the puzzle. A lot of times it's like, well, I have my cash flow is limited now. Okay, great. You have the Elephant token, right? So start there, get in. You can dollar cost average there. I mean, it's not really fair to call it dollar cost averaging since it only goes up, but pace yourself, get in as much as you can. And then it'll take off, and that'll kind of get you out of the mud, so to speak. And then after that, then you can start to focus on the income side. If you live in a 2-income household, then that's a little bit easier. And you guys can definitely get in with futures. It's basically $200 minimum deposit. I changed some things. It used to, my first models, they're great. People love them, but we really have to treat the front end side like a business. Anyone can, get on the ownership side of the community and get the Elephant token, and that's where you definitely should start. But the front office futures and things like that, it is like a business, and it's the easiest business that you can be involved in. So, and why is that? So it's basically like $200 minimum deposit, but you can decide what your schedule is. You could put, somebody like me, you'd be putting multiple deposits of 200 every day, all day. Or it could be once a week, once a month, every 2 weeks, every 2 months, whatever. But it requires active engagement and active reinvestment. But every time you do that, your interest is building up until the next deposit. You deposit, that interest gets folded in, and it grows faster and faster and faster. And the important part about this for both like futures and Stampede, I'm not going to get too much into Stampede right now. We save that for another time. But the reason why futures works that way is because it's really about doing what you really love. So the point is you do what you really love, whether it's, just directly taking care of your family or people in your community, or maybe you have a small business, whatever it is, you can focus on that. And the point is that this shouldn't take too much of your time to do. It's like, it's the second of every Friday, throwing $200 on my way. Here's some fun facts though. If you start with just $200 in futures, and if you deposit every week $200 for 3 years, that's an investment of $33,000, which will be worth over 1.3 million at the end of 3 years, because it's paying out 0.5% a day and you're compounding weekly. So, but you could imagine different numbers, like say if you start with a larger, so I say that pretty much anyone can do it, right? With those sort of modest investment, especially if you do have income of some kind, it's something you can commit to, and you can do amazing things. The last thing with futures, and then I'll turn it over to SK, is that what makes it voluntary universal basic income is that you can choose whatever compound cycle you want, how aggressively you want to compound. You can decide to do that, but every time you do compound, it requires that 200 minimum, and that's so that people can't game the system. I built systems like that were very popular, and so for people in crypto, they love them, but didn't have the sustainability that I was looking for. And those systems are still running today, but they tend to inflate. And if there's certain types of tokens involved, the token price goes down, and it's still profitable, but it's kind of a headache. It's not going to solve the problems that we need to solve. But the futures account grows to $1 million max, right? So you can grow your account up to $1 million. Once it gets to $1 million, or at any size in your account, you can withdraw your accumulated interest. So at any time you can pull that out. So you can use that. You can get to like say you get to 50,000, and you're pulling X $100 a day. You can decide to withdraw it a little bit and then decide to go back in. So you can have your account going up and down like that, just like a normal savings account. But because of the high interest, you can stack up very quickly. But what makes it universal basic income voluntary, because you're paying into this, right? However, you could have somebody gifting you money too. So it's very fluid. But what makes it very interesting is that the system pays out 2.5 million in total payouts, and that includes compounding. So say you compound to 100, you've obviously invested some money too. In our example, you've gotten to $1 million, you've invested 33,000. The system will still pay you out an additional 1.5 million free of charge. So, and that's what makes it. And for, some people don't even earn $1 million in their whole lifetime. But with that kind of economic velocity, you can clearly see how you can do some pretty amazing things when you bolt that on to whatever really makes you happy and whatever really brings you joy. So I'm going to end it with that, and we can switch over to SK, or we can take some quick questions, whichever way you want to do it. What do you think is the best course?
Yeah, do you ladies have any other questions that you'd like to ask? Because now would be the time. It's a good time if you've got questions. Just either hit your mics or type in the chat. So we've got quite a few. Oh, camera is on. Hello, Leela. So my baby has just burst through the door. Okay, do you guys want to move on to the next speaker, SK? Yeah? All right. I'm sure the questions are going to come. Just give me a bit more time. Thank you so much. I mean, you kept that to yourself in the phone call, but I had a feeling you were Christian. I had a feeling about it. All right. Okay.
That's awesome.
So, SK, are you ready to go? I just need to... Where are you? Oh! Leela.
Yep. Hopefully, microphone's working okay. So,
we can hear you loud and clear.
Awesome. Well, Nikisha, first and foremost, thank you very much for this platform here, and it's a pleasure to meet you and your community. I'll just do a brief introduction for myself, but you can just call me SK. I'm pretty much an investor and helper of Elephant Money. I've only been in crypto since January of 2021. I'm a mining engineer by trade, and I've been in the rat race for, 12 years before I decided I needed something different that could change not only my life, but the future, for my family and all of my loved ones too. And we're really excited here to talk about Elephant because this is going to be a vehicle, I feel, that anybody can relate to, anybody can use with the ease of access to it. And yeah, so I'm here to just kind of support BT and help answer questions, maybe get into some of the technicals of how this works as an economic vehicle. And yeah, so I guess anything else about me too is I am also a content creator. I've been one for 5 years, just about, but I've only been doing, I spun up a brand new crypto YouTube channel and really used it to just teach my loved ones to get into the things that I'm making plays in and I'm making money in. And, 90% of my channel happens to be about Elephant Money, and for good reason. And I think you'll understand by the end of this call and maybe, the future series that we do with you guys. But, it's amazing because I was just talking to all of my friends and family and setting up different appointments. Like, hey, what do you got going on Thursday night? Okay. And then I'll talk to someone else on Friday night and Saturday night. I'm just repeating myself over and over. So I just started to just put that onto YouTube instead. That way they can watch it. We can talk about the questions and get into the details later. But yeah, just excited to be here and happy to answer any questions.
Maybe you can, SK, maybe you can just tell them how, you factored in Elephant Money to your own particular plans and maybe juxtapose that with some other things you've used in the space.
Yeah, absolutely. So, and I apologize if I'm talking a little too soft. I'm in a household with people sleeping. It's midnight where I'm at in Singapore vacationing, but yeah, so Elephant Money, this is one of the things. So my very first project I actually got into was bank tellers, bankroll flow. It was over on a Tron blockchain, different ecosystem, a thing of the past. But it, when I was researching, what was I going to do to get out of the rat race? What can I tangibly get into that's, easily accessible, doesn't require all of this trading analysis on charts and predicting when to buy low and sell high. And one of my best friends introduced me to DeFi, And the first project he brought up to me was Bankroll Flow. And that really just completely engrossed my mind. All of my free time outside of work and outside of my, at the time, girlfriend, it just went into learning more about DeFi, decentralized finance, and, you know, these vehicles where if you put money in, you can just, you know, passively, you know, accrue income, and you can just interact with it, you know, as often as you choose, and your money will grow for you in your sleep. And so, you know, the culmination of everything that BT or Bank Tellers built is now in Elephant Money. And there's so many different aspects to the ecosystem. So as Bank Teller said, one of the first things you want to get is the Elephant token itself. That is the shareholder token that will appreciate in price. And there are so many backstop mechanisms in place that keeps that price going up. And eventually you're going to be hitting multiple X's when we start going up that hockey stick. Now, futures and some of the other aspects of the ecosystem, those are more for, you know, if you have Elephant token, you may not necessarily want to sell that entire bag. You know, you're going to be, you know, shooting yourself in the foot if you get rid of all of it, right? You don't have an appreciating asset anymore. So the secondary aspects of the ecosystem, like futures, where you're building your passive income generation, you know, that's what you want to cash out. You know, you always have your nest egg of the Elephant token, but futures and trunk, all of that, that's going to be your monthly, you know, income that you're using to survive off of with this ecosystem. So yeah, many different things to get into. I'm in a handful of projects, and I've seen so many come and go. And one of the trickiest things about DeFi and crypto is that you can, you know, get attracted to these shiny objects that sound good, but they're usually run by inexperienced teams or startups where their liquidity isn't deep, as opposed to when you compare it to Elephant Money, where the liquidity is deep. It's almost 2 years standing already, and even today you're still at the ground floor of what's about to happen. So incredible times. Nikisha or Liz, are there any specific questions, or should I continue?
Do any of you ladies have any questions that you maybe had earlier but you couldn't think of? Please hit the mic or put them in the chat. Kelly, I saw you had a question in the chat. Did you want to expand on that?
Sorry, guys, it took me a second there to hit the mic. Thank you so much, gentlemen. That was really, really pretty cool. I was curious about utility. I know investing in NFTs, utility is part of that investment. So they have things like movies and music and art all under one NFT, for example. So you can have, you know, a big part of the community. And that was what my question was here does this have any relation to utility like that? Or is it just something strictly you're just investing in the tokens and the coins?
The utility is the zero overhead bank itself. So there's not a lot of the last bull run, including this previous one. Pretty much all of the yield is generated through emissions, which basically means that, you know, a team just picks numbers out of a hat and just generates these tokens. There may be some liquidity providers that are putting up capital so that you can redeem those tokens for, you know, dollars essentially. But there's not much utility outside of that. In this case, you know, me actually building financial engines of different kinds in professional financial organizations, like, actual trading systems, real-time currency feeds, and things like that. I looked at the Ethereum blockchain and what was available in terms of, writing smart contracts, and said, wow, there's some interesting building blocks already, but let me just play with this for a while. And that turned into 5 years. But I actually wanted to build a money machine. And I wanted to build a system where if I put $1 in, I get more dollars out. And how does that actually work? And so for decentralized exchanges, at least for the first and second generation decentralized exchanges, they operate on something called automated market making. And what that means is that there's no counterparty, so there's no order book. So there's not like buyers and sellers sitting on opposite sides of the market price. Instead, you have a ratio of tokens. So to keep it simple, if you want to price something in dollars, you have a token, and then you back it with BUSD or USDC or some dollar equivalent stablecoin. And so then when you initialize that liquidity pool, you say, I have this amount of dollars and this amount of tokens are equal. I put that in, and then it goes up and down and stuff. And people are basically, they either put dollars in to get the token out, they put the tokens in to get dollars out, and that gives it a price. What happens is when you pull either one of those tokens out of the liquidity pool, it increases the amount of the other token you have to put in. And so with that, you can start to establish a price that's rising by, so if you put dollars in and you take more tokens out, the tokens that are left in there are worth more, because basically you're filling this bucket that holds both of the tokens, dollar tokens, and cat tokens, for example. So as you take more cat tokens out, or let's just use elephant tokens out. If you take more elephant tokens out and put more cash in, it makes the elephant tokens that are left in that pool more valuable, and because there's a higher ratio of dollar stable coins in there than the other. So it's like, okay, great, that's interesting. I can create it. So you're telling me I can create a store of value if I take tokens out, but then I have to figure out a way for the tokens not to get dumped so that they can retain value. And so that's where I came up with the elephant graveyard and elephant treasury. So when I launched the token, 50% of the entire circulating of the total supply of the token was put into this graveyard where they never come out. So that means that when we did the first liquidity drive, the first influx of cash before the tokens even had a price, there's a floor on the value of the token because 50% will never get sold. So this token can literally never go to zero. Okay, so that's
interesting.
It can never go to zero because half of the tokens will never get sold, ever. Then on top of that, the second largest holder in the system, besides the liquidity pools themselves, is the elephant treasury. And that's where the magic happens. Because if any utility that I bring on to the front end office, I want to run that as a cash business because, let's keep it simple. I have elephant tokens and I have, and they're backed by cash. I want to bring in, I want to basically have cash businesses where I can take those deposits and I can basically shove that cash into the liquidity pools, which raises the price of the elephant token. But when I do that, I don't give that elephant token to a regular person that's gonna, sell it if they want to get a mansion or, whatever, a private island. No, I take that elephant token and I put it in the treasury. So what happens there is that we're accumulating all this elephant in the treasury. So the treasury is the second largest holder. I think the treasury currently is over 10% now. So 60% of all tokens are owned by the protocol. Okay, great. So this treasury, this single smart contract holders is gaining a lot of value. The treasury's current, since we launched futures, the treasury went from 9.8 million to 11.2 million in less than a week. And that's only going to accelerate as futures continues to run. And we have a lot of, we have over $140,000 that we're pumping into the treasury gracefully, and that's increasing the price. Great. So that treasury's gaining value. That's great. What do I do with that value? Do I make wells around the world for clean drinking water? Do I help with like soup kitchens around the world with that money? These all sound like noble endeavors. How about mental health for families? Domestic violence, whatever you want to do. Sounds great. That's not cash efficient though. And remember that we're just trying to be the bank. We're just trying to provide the core utility. So what else do you need besides an appreciating asset? What else in finance is a core building block? That core building block is yield. Ooh, yield. That sounds good. And what kind of yield? Like at a regular bank, you get less than 1%, if that, for a whole year. Less than 1% for a whole year. And in many cases, after fees, you're paying the bank to hold your money. But we want like world-changing yield. We want unicorn level profitability. We want Netflix level profitability. We want Uber level profitability. We want big tech level profitability. Google numbers, Amazon numbers. Can we deliver that to everyone? Well, it turns out that we can, because the way those AMMs work, that's a parabolic equation. It's like x squared, like you remember back in high school, y equals x squared. There's a coefficient or whatever, but it's basically y equals c times x squared plus whatever. That's the equation. I can work with that. So what I did was, okay, I built all kinds of deposit contracts where, and what we're working with now is like 6th generation of my contracts, by the way. So the tools that we're talking about now in this constant product formula, it's existed since we started, but the way I use it is completely novel. I basically turn a mechanism that's used for trading without counterparty for decentralized exchanges. It's just meant for trading and pricing. I turn that into a mechanism for storing value by, the way I launched a token, 50%, that 50% never can be sold. That establishes the floor. I do a fair launch. Everyone who puts up whatever amount of money, they get whatever tokens are left. Basically, 50% of the tokens are held by the graveyard, and it'll never let it go. It's getting reflection. So every time there's a trade, there's taxes on the trade. But basically, anyone who owns a position, if they do nothing on every transfer, on every trade, you're going to get a percentage based on your ownership of that token. And what makes that interesting is that the graveyard and the Treasury, since they're the largest holders of the token, they're going to receive the most amount of income. And they basically use that income to, build up the money in the system. But the way that'll bring it all together is you're coming in with futures, you're getting 0.5%, 0.5% APR paid out daily. That's what is it, 180?
187.
86.5, yeah, 186.5 APR a year. And so that's phenomenal. It's not super crazy. Like, there are assets that definitely have given that can give you like 100, that can do a respectable 182%. Some would say that that's almost modest, right? Like, if say we were just investing in a stock or something, you can definitely do more X's, right? Than just like 1.8 times your money, 1.86 times your money. But you can compound that so you can get up to like 5x. Where's that yield come from? It comes from the Treasury. So when we take in deposits on the front end into futures and to Stampede, those two products, and those get basically sent as used for buybacks to pull the elephant tokens out of the liquidity pools and put them into the Treasury. The price goes up, right? So the Treasury is getting more tokens, and those tokens are increasing in value. So it goes parabolic. So at the height before the exploit, our Treasury was worth over $200 million. The protocol book value was $500 million, $560 million to be exact, which basically means that the value of the community at a modest 10x multiple. You can get higher multiples for technology, right? But let's say 10x. That's a $5.6 billion business. And we're just getting started. We pay out real yields.
I just wanted to say thank you so much for explaining that. I also, if I'm understanding you correctly, and there's some language in there that I have not heard before, the utility that...
Oh, you cut out.
Yeah, can you hear me?
Yes.
Okay, sorry, I just got a phone call. So the utility really is not anything like trying to find all of these other buckets to support. You guys are actually doing it in a way that you may have these other platforms, these other positions that you have put together to just increase the amount of money that's coming in for those people that do want to go out and create in other ways, like LCF, to be able to help support those missions. I also really appreciate the fact that you have put this cap, this base amount of 50% that you can't go below, if I'm understanding correctly. And it really does make a big difference to an investor to know that, because your money will be increasing rather than decreasing from that point anyhow. So I appreciate the answer, and it does make a lot of sense. I did have a second question. I know other people have questions in here too, so I will wait until they're done and then I will come back and ask.
Okay. But to put, that's great. You got it. And to put that in a bow, what is the utility? The utility is real yield. So the utility is the mousetrap, which is we have a front-end product for our community bank that everyone wants. I want to augment my cash flow. I want the ultimate savings account. I want the best yield in the world. Where can I park my cash, get guaranteed cash back out? No crazy tokens or anything, stable coins. And so the holy grail is a system that doesn't rug, a system that doesn't fail, that pays out real yield, that you can easily understand. I'm explaining the engine, right? this doesn't sound too crazy. This sounds like a little like, taking us back to like a steam engine. You can kind of understand how it works. The pressure builds up here. This is a little bit of fuel you put in, and then we get like X percent of efficiency and stuff like that. That's kind of how this works. We can easily predict where the price will be based on daily volume. With everything that we have set up in futures, in the existing machinery that we built, this system is 40 contracts. So 40 contracts make up this. So this is not just about math. This is about engineering and the flow of money. And it's about time horizons. Some people some people are rich. So okay. This is a big takeaway. Let me put this to my video on for this one. This is what you need to understand. This is what I learned at Fidelity, right? One of the biggest wealth managers in the world. Some people are trying to get rich. Once they get rich, maybe they never get wealthy. But the wealthy are just trying to stay wealthy, right? So they're going to take on minimal amount of risk. So they love something like this. That's who you're swimming with. That's what creates the wealth effect that you get to enjoy. People get to enjoy the wealth effect that's created by, so there's two types of wealth effects that happen in the system. There's the wealth effect that comes from like whales coming in, but they can't hurt you. We're all, the thing about this is the first financial cooperative where literally all the stakeholders, every single stakeholder in the system is rowing in the same direction. Everyone's rowing with what we call affectionately Bertha. Bertha is the elephant treasury itself, right? It's the one thing that, there's a graveyard, which protects us, ultimate protection. And then there's the treasury Bertha that pays out all yield, pays out all liabilities. So we have real yield. But okay, here's the real thing that you need to understand. Some people can say, well, wow, this sounds like a really complicated, like Ponzi, maybe? Isn't this just a Ponzi? Okay. But what is the back office again? Let's not forget what it is. The back office is a token that can be bought and sold publicly in a decentralized exchange, unstoppable decentralized exchange. Elephant yesterday was the 4th most watched token on Binance Smart Chain. And that's only going to increase as we rise through that parabolic curve, which basically forces the trading volume to rise in lockstep. We did close to $1 million in trading volume yesterday, or most days between 250 and 500K trading volume. That's only going to increase. So that brings in swing traders. That brings in people who just are interested in a token. This token's appreciated in value. I can easily see it. I'm going to buy the token. I'm not even going to go to the website. I don't care. This token's been around a long time. It's increasing in value. I'm going to buy it. I'm going to keep it. Those people bankroll you. They're the ones that pay for the well wherever in the world, right? They hold the token and they never cash in on that. They want to keep that on their balance sheet. You want the yield. So what we're getting these back to back. What? Not buy, sell, up and down, not volatility this way, sideways volatility. We only get positive volatility because we're basically streamlining buys, and we're taking advantage of time horizons, because some people are just want to stay wealthy. Some people just want to generate income immediately. So they'll put in $1 million, they'll max out their account, and then they'll claim all the way down. maybe top it off, claim. More claims than reinvest. Sometimes it's reinvest, or stretch it out. But yeah, that's it. Everyone has a different time horizon, but the net effect on the chart is that people are pretty much always buying. And then we have buffers in place that just hold raw cash for the people who want to cash out for the day. So we have daily liabilities that we need to meet. And then we have a buffer pool that's growing much larger, faster than the daily liabilities. So it really allows Bertha to just cruise, just collecting buys. And so the only sales come from token holders themselves. And when token holders themselves sell, that further feeds the graveyard and Bertha. So we got a whole bunch of things in place. And that's actually a good segue because EMH just joined and he can go more into, and I think EMH, it'd be good to, start with your background in education, and then, really just really focus on the price curve. And also if you bring up the spreadsheet where we actually can show, we know this is an engine. So we know for the amount of gas that we give the system and at the rate of volume that we pump that in, we know exactly where the price will be. So this is something that has never existed before. And it's sad because I'll leave you with this. It's sad because Vitalik Buterin and others, they came up with the constant product formula in actual practice and used it to great effect to build Uniswap and a lot of the ways, a lot of the tokens that are still high flyers today in the new token economy. They started out life on Uniswap. But unfortunately, they sold their soul because they made it to Binance. They made it to centralized exchanges. But the problem with that is once an asset gets on the order book, it's no longer math money. It's speculative. And the price is derived from whatever someone will pay for it. So the difference is our price is never based on that. It's based on the actual math and these smart contracts. And that is why one of the reasons why we're still small is because for the exchanges that did want to list us, we said, no, we're not going to get listed, because if we get listed on centralized exchanges and get traded that way publicly, then our price is speculative and we break the machine. We literally break the golden goose. We've built the golden goose where we've basically feed it grain, cash dollars, dirty fiat, depreciating dollars that fatten up this best performing asset of 2022. Okay. So that's we don't want to break the golden goose. So we'll never go on a centralized exchange. This will always grow organically through each one teach one, or whoever just sees the price action on the DEX and wants to buy it off the DEX or straight off the site. But
yeah,
I'll stop there.
And then just to add to that, BT too, if any of you guys want to take notes. So another way to think of everything he just said, right, is Kelly, fantastic question. But besides yield, Elephant Money serves as one of the greatest store values out there as a utility, right? Think of Bitcoin. That's kind of what it is. That's its only purpose. It's a store of value. But the difference is that you're actually at the whim of any of the people that got into Bitcoin before you, right? There's no real backstop measure that exists on Bitcoin to hold that price up, right? Any of the whales who got in before you, that hold more than you, that bought it for cheaper than you, they, if they sell, they can crash the chart. Now, an analogy to think about here with everything BT has mentioned is that, the protocol itself is absorbing more and more tokens over time, right? There's 1 quadrillion tokens of Elephant that'll ever exist, right? No more can ever be minted. And 50% of it, like you said, is in the graveyard. Now, the Elephant Treasury, aka Bertha, with that continuing to grow, that means more tokens are being taken out of circulating supply and it's going into the protocol. And so think of the world's oil supply, right? There's there's a finite amount of usable oil that we have right now. And as a human race, we're consuming it way too fast, right? What happens is we start to approach several, years from now, the end of the world supply, usable as we know it. What happens to the price of oil? It starts to skyrocket, right? That's the same engine that you have in Elephant Money, the token itself. And as more tokens are getting locked up into the protocol, they're becoming more scarce, therefore becoming more valuable. And that's why everyone's price is appreciating on the Elephant token. So Bertha, a really good analogy for that, the Elephant Treasury, is like a car jack. And, this is from another influencer named DeFi Springs. Shout out to him. But Bertha acts like a car jack. It's that price floor that just keeps mechanically winding up a little bit more and more and more. And it boosts that price floor higher and higher. And all the sells and buys that are happening on the Elephant token, all of the BUSD, or all the money that's coming into the futures contract and anywhere else in the ecosystem, they're feeding more tokens into the Elephant Treasury, which right now is at 105 trillion tokens. Well, imagine in the future that 105 trillion turns into 150 trillion, turns into 200 trillion. Now you have more and more tokens locked into the Elephant Treasury, in addition to that 50% in the graveyard. We already know about that. But as the protocol absorbs more tokens and they become more scarce, more valuable, it boosts, it carjacks the price of Elephant up. It's a backstop. It can never go below that price. And people will profit take, but every time they sell Elephant token, their transaction taxes feed back into Bertha, which is the carjack that just keeps going up. So you have this chart that just won't go down eventually. And when it hockey sticks up into what we call the supply shock, it's just going to get deeper into the supply shock. And that's what EMH Bailey can go into as well. So just wanted to throw that out there. The store value aspect and the fact that more tokens are becoming more scarce. So.
Hey, everybody. My name is Bailey. Thanks for having me. I really appreciate the opportunity to talk to you guys today and to share just kind of some of my experiences with Elephant Money, in my background. Am I coming in okay?
Yeah, we can hear you perfectly.
Awesome. All right. Thanks. So I don't know. So I'm a math teacher, and I've actually been in education for my 21st year in education. And so I've been a math teacher throughout the whole way. And so I've taught middle school, high school. I was a part of instructional leadership teams, worked on curriculums for the state that I live in. And, I was teacher of the year in our district and everything. So I've always been touting like, hey, math is amazing. Like you're actually going to use this stuff eventually. No one ever believes me, but so I love the education aspect of it. So kind of how I've been approaching things and sharing my experiences with Elephant Money is really through the lens of education. And one of the things that brought me into crypto and decentralized finance, I'm relatively new in the space. I started looking at cryptocurrencies and everything last March or so. And basically, I started realizing that the traditional systems that we have in place, like in our society, don't really work for many of us, so folks that are, in the middle class or, have a lower economic status or not as many opportunities. There's really a need for equity, when it comes to financial products. And so one of the things that I was kind of freaking out about was, all right, so I've been teaching for 20 years. And like, if I want to retire like comfortably, like I might have to work for a whole nother like 20, 25, 30 years. And, also my family had been going through like some hardships, and, my mom had a lot of significant health issues. And there's so many systems that, really need improvement, in our, in our world and everything. So the idea of this kind of decentralized finance kind of struck me. So I started to look into it because it really puts, the power back to like the people, so, and, one of the things that's great about like Elephant Money is it's driven by the community, and the community is just the participants that take place, in the protocol. And so we all have kind of like our own ownership of our finances, like in our destiny, so I really started to dig more into crypto and decentralized finance, through the last month of last March and April. And I did a lot of studying before I actually kind of took the plunge and got into it. And one of the protocols that I came across was Elephant Money. And the reason I came across it initially was, I was looking at charts, and looking at different projects, and Elephant Money started to get talked about a bunch, by different influencers and everything. And the chart was like fascinating. We had seen this like really sharp, like parabolic rise. I had never seen anything like it before. And I was like, I kind of want to know more about that. And so I started to kind of study just basically how to interact with the system, how it was laid out, how it worked. And, I must admit, guys, like when you're first getting into this space, it's the learning curve is like really steep. Like there's lots to learn, and it could seem like overwhelming. And so I kind of took it slow, like step by step. And like you pick things up over time. Like you're not going to feel like super confident in the entire system or the entire space like right away. But it's a process. And, so I started studying a little bit more about the protocol. I was invested in it. But I still didn't understand like fully like all the great mechanics and everything like at play until, we really started to wanting to kind of like push out and attract more people. And I was like, well, all right, like I think it would be great to be able to explain this system. I know there's something special about it, but I want to dig into like really learn about it. And as I kind of dug into something called the tokenomics, which is kind of like the economic structure of the protocol, I really saw how much mathematics and kind of like the ingenuity and engineering behind this protocol versus some of the other ones in the space that were also, being successful. And I had kind of dipped my toes into a few other projects as well. But then I was like, wow, like, Bank Teller is onto something here, and you got to, really respect the fact that like this project was put together by an MIT computer scientist with over 25 years experience in the financial industry, masters of finance from, Boston University and everything. Like this guy, really is battle tested, hardened, and really knows the space, cares about the space, and really wants to make a difference in the world through decentralized finance. And, kind of studying a little bit of his background, like he's actually really been like a pioneer in the space when it comes to decentralized finance. A lot of the current projects are all based off of, some of his prior work as he's been building towards kind of perfecting these things. So like there, I was like, all right, so the pedigree's there, the knowledge is there, which is great. And then, I started to hear like really cool things like, SK would say like supply shock, and this elephant token is going to gain so much value because it's scarce. And I was thinking to myself, like, that kind of makes sense. Like the supply and demand, if something's scarce, it's more valuable. But in the same time, I was like, well, I have like a little league card of me playing baseball, autographed, one of a kind. Right. And that's not very valuable, honestly. Like, I don't think many people are going to be ponying up big bucks for my little league autograph card. So I was like, well, scarcity, like, all right, like just because something's scarce, like, why is it valuable? So I really started to study. I wanted to study some of the math behind like what made these things tick. Because one of the things I found like really interesting was in decentralized finance, you can actually conduct transactions, trades of, coins and different assets, and you don't need a second person to do that. where if you're trading, say, stocks, or if you're going to centralized exchanges, you need like another person on the end willing to buy or sell whatever you were trying to do. All right. Or you needed like a market maker there that was actually handling all those transactions. Where decentralized finance is a little different, where actually all the tokens for both assets that you'd be interested in are sitting there in these locked smart contracts called liquidity pools. So it's kind of like a big pool of basically money of like two different assets. And whenever you wanted to transact, you could just go to that liquidity pool and you could input or sell one of your tokens and take out the other token, and it would automatically kind of keep track of the values of both of them and the price of both of them. And as you sold a token into a liquidity pool, there started to be more and more of them. And then the token that you took out, it started to become less and less of those, and the prices would change. And I was like, all right, this is kind of like crazy stuff. And then I looked up a couple of videos like on it to try to like make sense of it, And I'll be honest with you, like I'm, middle school math teacher, high school math teacher. I went on to these videos and it's like mind blown, like crazy levels of calculus. I was like, I don't know how like, any normal human being is really gonna like digest this and actually know what's going on, because I was like, woof, this is really intense. So what I tried to do is like study it in a way that I could kind of use just like my skill set of like the basic algebra and try to make it more accessible and understandable to the population, because I was like, this is like a one of a kind piece of architecture here. And what Bank Teller has actually kind of performed is he's found a way to take those math formulas that calculate these prices, and he's engineered the system to take advantage of those formulas to actually create a token that's going to appreciate or gain value over time. And it's then going to be kind of immune to people selling it and then decreasing its value again. And that's going to lead to this like super supply shock of the price, because what's happening is like the tokens are going to keep being accumulated by the protocol, and the asset that's actually going to be more abundant in those liquidity pools is the BNB or BUSD, which is like the value, the tokens that are the big market cap tokens that are worth lots of money. So I was like, whoa, this is pretty intense. So the whole idea, so I started a YouTube channel called Elephant Money Herd. And the idea was, Elephant Money has a great community and we call it the herd, so I was like, all right, this is going to be a channel for education for our community, so for the herd. And so I'm like Bailey from the EMH, so I'm just part of the herd. I'm part of the team. And I thought that especially during this year's been a very rough year, just in the markets in general, economies are bad, inflation is high, and then we've had definitely some missteps in more of the centralized crypto space, and people have really gotten greedy, over leveraged themselves, and then they couldn't handle, prices going down and harsh economic conditions. So we've had a really rough go of it. And I knew that the way Elephant Money was structured, that it would be able to weather the storm and actually surpass it, because it was so fundamentally strong and sound. And, over the course of last year, I don't know if these guys mentioned it yet, but Elephant Money outperformed 100% of the top 100 crypto assets. And for me, my personal projections are it's going to do that again this year, which is crazy. But so the whole idea behind me creating this educational platform and channel was I wanted to make sure that the people that were in the protocol understood it and understood how ingenious the tokenomics were behind it, and really kind of give them the confidence to be able to kind of stick with this, throughout the bear market. And then also one of our biggest pushes has been like each one teach one, and to kind of bring on our friends or family members to kind of share in the community. And I found that, you know, when you're first new to elephant money, it's very hard to communicate it to someone else. You know, when I first invested in it, you know, I told my wife, I was like, all right, I invested in something. It's really cool. It's called elephant money. She was like, what? Like, what is elephant money? What is that? You know, because it kind of has like a silly name at first. And then I was like trying to explain it, but I was new to it. So I was like, you know, so I really wanted to make sure that, you know, when people were sharing this, they could, you know, kind of speak to it at a more comfortable level and a more confident level. And then, you know, be able themselves to appreciate kind of why this thing is so ingenious and why it's such a solid investment and a solid community to be a part of. You know, this is going to be something that's going to be like a really long-term stable protocol. And, you know, so you want to be able to understand something that you're involved in. So that's kind of like the angle where I was coming from. And then when I just started diving into like all the math behind this thing, I was like, this is like pure genius. Like, this is unreal. So I really got excited, and I just started like geeking out and doing spreadsheets and graphs and everything. And at first I was like, you know, I did. And look, I'm rambling right now. I'm long-winded. I got these like 50-minute, 40-minute math videos on like this one, you know, niche protocol, you know, out there. So like, yeah, I know I wasn't going to be like mainstream hit, but, you know, people started really giving me like positive feedback, because like, oh, I actually understand this now, you know, and, you know, that kind of motivated me to kind of keep it up and keep going with it. So, yeah, so that's a little bit of my background, just from an education point of view. So I just wanted to share maybe today with you guys just a few little things. Basically, like this year, 2023, I'm calling it like Year of the Elephant. And I feel like the stars are going to align for us. You know, I think everybody has been kind of through the ringer like these last few years. You know, it's like, hey, we need a win. And, you know, here it is, like, you know, all of us that are part of Elephant Money, there's been some, you know, different circumstances that have all brought us here. But I feel like, you know, we're here for a reason. We're here for a purpose. And, you know, going forward, like, I just see it's like sky's the limit. So however, you know, you get to Elephant Money, like, I feel like there's going to be a lot of like really good prosperity for us going forward. So so the whole idea behind the 2023 is like, first of all, I wanted to kind of get more enthusiasm going again for it. And then also, you know, really kind of recapping like all the concepts and everything that I kind of walked through everybody with like in 2022. All right. So I kind of had this like video where I kind of show you guys like all the different inner workings of how the math works. And then what I can do is show you guys a little bit of how like futures works, which is like our new really exciting product that's coming out. All right. Am I allowed to share my screen? Do I have those permissions? I'm going to try, see if I can do that.
Yeah, let me know if it works when you do it.
Okay. It says host disabled.
No, how do I make it happen?
I believe if you go down to the share screen button, there might be like a little option that you could click that would be
okay,
to allow others.
participants, right? Yeah. No, wait. I don't think that was it. Try again.
Okay, I think I can do it.
Okay. Woohoo.
All right. So you guys can see the screen I got going?
Yes, we can see it.
Okay, cool. Let's see. Okay. Yeah, actually, 2 years ago, I taught my high school classes all through Zoom. It was just kind of a wild year through the pandemic. So I've actually gotten used to working with Zoom. All right, so Yeah, so we're at the elephant.money site. But first, I just want to walk you through again just a little bit of one of my last videos, which is kind of talking about the idea of Bertha, which is the name of the elephant treasury, which is basically how this all ticks. Because whenever people discover elephant money and you're like, oh, well, futures is going to pay 0.5% daily, and you can compound that. It seems too good to be true, and a lot of other protocols have been offering things like 1% compounded, daily and everything. And the fact of the matter is, most of those things, while they could last for a little while, they'll always fail in the end, because it's unsustainable, the growth that you can actually get through compound interest with multiple users and everything. So a great question is like, hey, like, all right, elephant money, like, why is it different? What makes this so solid compared to some of the other protocols and things out there, investments out there? So I wanted to kind of start off the year. So this is one of my newer YouTube videos with just kind of an overview of how Bertha and the Treasury worked, because I felt like that would be a good thing to have out there as more and more participants come and they start to discover elephant money. That question's going to come up, like, how is this sustainable? How does the income work? Like, you're paying out these yields, like, how does that happen and everything? So I just wanted to kind of show just a little bit of what I kind of included in my video. And this is, I don't want to like blow you guys out of the water with like, crazy levels of math or everything and anything, but basically the idea behind those liquidity pools, which is where those funds are kept, you'll have two big liquidity pools where most of the value and assets of the elephant token are. And so we have our elephant token, and that's paired with a cryptocurrency called BNB. All right, so that's the primary currency of the Binance Smart Chain. And so as that, you have a liquidity pool that has elephant tokens and BNB tokens in it. And so as people want to transact or buy elephant, they'll go and they'll put some BNB in, and then they can take elephant tokens out. Or vice versa. If someone wanted to sell elephant tokens, they could put elephant tokens in and take BNB out. And how that works, and like, well, all right, well, what are the prices? How much do you get to put in versus how much do you get to put out? It all revolves around a mathematical formula. It's called this constant product formula. And basically all it is the number of tokens of the two different assets. So the number of elephant tokens times the number of BNB tokens is always set equal to a certain number. And what that allows us to do is we can kind of see all the different combinations of elephant tokens and BNB tokens that would be in the liquidity pool at any one time. So as people come, take, and they take from it, and then they put stuff in and they're buying and selling, there's always a combination along like this blue curve right here. So that's how the constant product formula works in these liquidity pools. And that's the case for all liquidity pools, for every single like decentralized exchange, for every single types of coin, so it's not just exclusive to Elephant. And then what's really cool about Elephant is not only do we have a really large liquidity pool that has the BNB token, we also have a large liquidity pool that's paired with something called a stable coin, which is the BUSD token. And you might notice that in crypto, sometimes prices can be more volatile, they go up and down quite a bit compared to like traditional investments, so like a BNB token or Bitcoin, Ethereum, those are like kind of the big ones that people are familiar with. Their prices can vary quite a bit day to day, where there's also types of cryptocurrencies called stable coins, which are designed to stay, steady and reliably predictable at the same value. And so we also have our elephant token paired with a BUSD, which is Binance like USD, so like a Binance dollar. So all those coins are backed by actual dollars. That's in, a bank. It's called Paxos. They're actually, I believe, in New York. So this is more like predictable to stable coins. So we have elephant paired with like a nice asset that BNB that I think is going to appreciate over time. And then we also have that elephant backed with a stable coin to add a little more stability, to the price as well. Here, guys, we have, again, there's this constant product formula here, and that kind of tells us all the different combinations of the elephant tokens and the BUSD that we can have at any one time in the liquidity pool. And the other unique thing, and this was the thing that I started to, once I understood that, where I had this aha moment, where I was like, all right, this kind of makes sense now, because remember how we were talking about this supply shock, and like elephant token is like now really, really valuable, because it's scarce, and I was like, so what? Like, there are things that are scarce that like no one wants, so like what makes this like actually valuable? And it's the second piece behind this formula, where it's not only telling us like the amount of tokens that we can have along this curve here. So we can have, different combinations of tokens, but how to actually get what the tokens are worth and valued at was kind of like my big aha moment with this. And how it works, everyone, is the two assets in a liquidity pool at any one time always have like equal value. So the value of a liquidity pool is split 50-50. So whatever the value of one part or one of the assets in the liquidity pool is always going to be equal to the value of the other asset. So what that allows us to do is it allows us to find or calculate like all these prices, because I was like looking at, all these different screeners, and like elephant token is now worth this today, and it's gone down a couple percent. Like, where do these numbers like actually come from? Like, how are these things calculated and stuff? And so like how it works, guys, and these numbers are fairly like unfriendly, because elephant token, you're going to notice, has like it's a very large number of elephant tokens. It's a fixed supply, but you get these really big numbers. So that's why it looks a little unfriendly. But basically how it works is the amount of, or the value of, say, BUSD or BNB that's in your liquidity pool will be equal to the amount of elephant tokens in your liquidity pool. And those two things are always equal to each other. So for instance, about last week when I made this video, there was about $8.3 million in BUSD in our liquidity pool. And there was close to like 89 trillion elephant tokens. And that was indicated by like this point right there. That's where we were about like a week ago or so. And I can always then just find the value of those tokens. And it's just basically price per elephant token. So you do the amount of monetary value in there. So BUSD divided by the number of elephant tokens. And then a lot of times, because these numbers get so small, you'll hear everyone in the community usually refer to the price of elephant as like price per million elephant tokens, because the million elephant tokens brings the value up to a number that's a little more like easy to comprehend and understand. And just, a week ago, a price per million elephant tokens was about, like 9.3, 9.4 cents or so. Since then, guys, with the release of futures, it's gone up quite a bit. But so this is where I do that times a million. It's price per million. Okay. But here was the big aha moment for me. So, you guys might not be like super math geeks and all that. But here was the big thing. So when we're looking at like how to calculate the price, this is where I had that aha moment of like the supply shock. What happens is, as our protocol and our treasury keeps collecting elephant tokens, the amount of elephant tokens in these pools keeps going down and down. And what happens with that is, as the token count goes down and down, the number of BNB goes up and up. So, or the number of BUSD goes up and up. So as people are say participating in futures, or people are coming and buying the elephant token, they're putting in BNB or they're putting in BUSD into our liquidity pools and putting more value into our liquidity pools, and they're taking out elephant token, or the protocol and the elephant treasury is taking out that elephant token and keeping it locked up in the treasury and not in the liquidity pools. And what that's doing is it's drastically increasing the amount of monetary value that's in the pool. All right. So, hey, the number is going to go up because, we have more money, and we're dividing by a smaller and smaller amount of elephant tokens. So I had this like little kind of comparison of, what happens if, we're here, at like $8.3 million in here, and then someone, or over time, we add $3 million more dollars. So we go from like 8 million to 11 million, and we would slide down to this point here. And what we'll be able to experience is we have 3 million more dollars. So that's perfect. But then we also have a smaller amount of elephant token. So now this 65 million elephant token is actually worth this $11 million. So when you calculate the price, it kind of explodes because you're getting more money. So the top of your fraction is bigger, and then you're dividing by a smaller number, which means your value is going to get even bigger again. And then what happens is, as we move further and further down this curve, all right, we have more and more money and less elephant token. And that's where this parabolic like price appreciation, the supply shock is what they call it. That's what we're going to see, where the elephant token experiences this really, really rapid rise in value. It's because we're able to move down this what's called constant product formula to a point where there's lots of money and a small amount of tokens. So that's where the whole idea of like, all right, something that's scarce is actually valuable. It's because it has to obey these rules that are set in place with these constant product formulas. All right, there's more and more money in here, less and less elephant tokens. That's why its scarcity is actually really meaningful, because it increases the value of every token like astronomically. And that's the whole design behind like elephant money, is the protocol itself. So the elephant money itself is able to kind of manipulate the mathematics to make this elephant token so valuable in the future. And the way it's doing it is, it has this very unique system called the elephant treasury, okay, or Bertha. So anytime that a participant interacts with the protocol and say invests in futures, okay, or will buy elephant token, all right, Bertha is going to take a portion of those funds, and she is going to be constantly buying elephant token from those liquidity pools. So that, I believe Bank Teller was talking about this like constant like buying pressure. So there's always going to be Bertha taking tokens out of those liquidity pools, no matter what. And that's going to create the treasury, which is going to be responsible for eventually paying out like all these yields, because we're going to be making money on futures. it's going to be able to afford those because the elephant treasuries price is going to be increasing so dramatically through the constant product formula, where our yields are going to be generous, but they're going to be kind of dwarfed by the amount of value that the elephant treasury actually generates through accumulating the elephant token. And this is like, when I started, like, this clicked for myself, I was like, I'm making a YouTube channel. Like, I'm sharing this because, like, this is amazing. Like, this is like, I've been telling people, like, math matters. You got to learn math, it's going to actually, like, impact your life somehow. And I'm like, there it is, like, this is unbelievable. So and what's great about this is that with these formulas, we can actually continue this trend. Like, this can go for a long, long time. Like, this actually theoretically can go infinitely in this direction. And, like, yes, like, the elephant tokens get super expensive. But even though the tokens get super expensive, the act of pulling out even that small amount of super expensive tokens actually explodes the value even more, because it's still always dividing by that smaller number, and the price just keeps appreciating, and it's going to be like this really kind of wild, crazy thing. So, you folks, I'm, like, super excited for you, because you're stumbling upon this, like, almost at, like, the most perfect time right now, because we're emerging into 2023, I don't know if anyone has seen the movie. It's one of my favorite movies of all time, like Forrest Gump. And it's like, all right, so if you've seen it, you know what I'm talking about here, where it's like, there's the storm, and, him and Lieutenant Dan, they're trying to catch shrimp. And, they have this big storm, this hurricane, and it knocks out, like, all these other protocols. And, like, he's the only one, so they're the only ship, like, remaining, and then they start thriving and prospering. And I feel like, this whole economic downturn that we've been in has kind of, like, weeded out a lot of the weak protocols, and elephant money is going to, like, emerge, like, shining, and it's going to be able to kind of bring us all, like, to prosperity and everything. So this is, like, perfect time to, like, discover this and start to get into it. So it's really amazing. So that's, like, some of the math behind it. And just one other thing, like, that's really cool is this is called BSC scan. So another thing that's really amazing about cryptocurrency and blockchain technology is that everything is completely open and transparent. Like, every single, like, transaction, anything that you want to know can be found on the blockchain and then on these sites. So this is called BSC scan, and we can look up and see, like, who has the elephant tokens, how many tokens they have, what they're doing, have they been buying, have they been selling, and you can do that, like, at any point in time. And what's really cool about elephant money is, I just went to Elephant Token, and you look at holders, and this was from, again, last week. Bertha actually has many more tokens now, but you can see, like, these first 4 addresses that hold the vast majority of the elephant token are all owned by the protocol, all owned by Elephant Money. And the largest single person or investor is right here, and they have less than 1% of, like, the entire supply. So what that means is that as far as for the community, there's really, like, a nice equal distribution of the tokens. You don't really have to be very scared of saying 1 or 2 of the larger wallets just kind of selling everything and tanking the price. That can happen with other protocols that have wallets that have, like, people that have large portions of the supply. And then also that can happen with protocols that don't have as much deep liquidity or how much value that's in the liquidity pools as us. So it's a very stable system, very deep, solid liquidity, which means a very wealthy system. And, all the tokens besides, our friendly protocol contracts are all distributed like nicely, and you don't have to worry about one or two people really dictating prices through how they can kind of sell off like a large chunk, and you'll have like a rapid like price drop. You don't really have to worry about that. So I think that's really cool. And let's see, what else is there in here? Do I have anything else? Oh yeah, that's something that's a little more amazing. All right. So one more thing, guys. So I just want to show you this. So I had this, through all of these math formulas, and because it's so math-based with the constant product formula, we're going to be able to make kind of like predictions, or estimations going forward on like the price of these tokens. Now you can't really make predictions on traditional tokens, because hey, if we all had like a crystal ball, we would be like millionaires, right? But the elephant money system's a little different because it's Bertha, and the smart contract is always buying tokens no matter what, and when you have like a traditional liquidity pool, there's people that are always constantly buying and selling. And if a token got like really valuable, a lot of people would sell that, and take profits. And the way the system works here in Elephant Money, and what makes it so unique is, Bertha is a smart contract. She doesn't have emotions, and she's not going to be dumping or selling elephant token when the price gets really high. That's what the real ingenuity is, that we're going to actually be able to keep traveling down that constant product formula to get to these amazing values, where if you had any other system that people are in control of and not the smart contract Bertha, greed sets in and you never get down that constant product formula curve because people will sell it, people will sell. So that's what makes it like so ingenious. And that's what's really going to be cool about this. So that is also going to be able to show us or allow us to create these projections, because we know it's all based off of like the mathematics behind it. All right. So I just wanted to show you guys just real quick. And, we can say like when we had last March, Elephant Money released like a really great, product called Trunk. And they were seeing inflows of almost like $1 million on average per day, which is really quite significant. And so when I created, a little projection for my video last week, I went much more on the modest side, just to, be safe. And I called it, futures is coming out. Futures is absolutely amazing. But let's say the system, can average something about, say, $250,000 coming in like per day. And with the launch of futures, we had kind of averaged close to that, and it's going to pick up because as the word gets out, more and more people are going to be flocking to this, because this is an amazing deal. It's a great protocol. And I think people are looking for a solid investment, because so many things have kind of gone belly up this year, that, once the word gets out, like this is going to be like the thing, futures is going to be amazing. So I do think that, that volume is definitely on the conservative side going forward. But I just wanted to show just some of the concepts behind how the Treasury is really going to grow compared to the yields and liabilities that that will be generated by the participants, So we have our two liquidity pools that I mentioned. And basically what I did was I kind of split up that 250,000 because another thing, as that goes into the system, our Elephant Treasury is very smart. And Bertha actually will pick and choose between the two different liquidity pools where the lower price of elephant is at that one time. Because the prices change a little bit. The B&B pool will change a little bit if B&B's value changes. And then also if, people have bought and sold a little more from one than the other, the prices can be a little different. So Bertha's always like this, very thrifty shopper, and she's always picking up elephant tokens at the cheapest rate to really make sure that, she's getting the best kind of like bang for her buck, and, improving the just the how efficient, she is with generating wealth for us. So I just kind of split up that 250,000 in a way where the prices would stay relatively equal in the liquidity pools, which is one of our goals. And, not to overwhelm you too much with the math, but what we can see is as this starts to take off in the participation, you can see the price appreciation. Let me see if I can make this a little bigger for you guys, of like the elephant token, like in these liquidity pools. All right. So like after 30 days, if we had like good participation in futures, like we would go down, like right now in the B&B pool, which is a little larger, we have 119 trillion elephant tokens. After 30 days, Bertha's going to be taking that value of people participating in futures. She's going to be investing it in the elephant token, and she's going to be able to pocket from 119 to 88, a significant amount of tokens. This would be the tokens left in the liquidity pool. And that's going to drive the price of the elephant token up. And for like that month, your elephant token is going to appreciate like 81%. So almost double. So right now, today's prices, okay, we've gone up since my last presentation that I did on YouTube. We're almost about 11 cents now per million. We're getting close to that mark now. So at the end of that month, she'd be at like 19 cents per million for every elephant token. And then what we can see is as the months go by, she's going to be able to accumulate more and more tokens. Now, the rate at which she gets these tokens is going to be less and less. We're going further down that curve, which means they're more expensive. However, even though they're more expensive, notice how the price appreciation is actually picking up steam and is actually still increasing more and more rapidly. And anyone who purchases like elephant token, like say today, and holds on to it for about 300 days, it's very, very likely that you could see like a 1,900% like gain in value, over time, because if people participate in the futures, that money is going to be strengthening the Treasury, which is really just boosting up the price of elephant token. All right, so there was that. And so our Treasury right now is going to be experiencing that same price appreciation as anyone who holds the elephant tokens. But on top of that, as time goes on, and this is kind of like the real mark of it is, or the masterpiece behind it is, she's also accumulating tokens, so she's not only getting this price appreciation on her existing tokens, she's constantly buying the tokens from the liquidity pools. So she's adding also to the total of her tokens. So she's adding more tokens and the price appreciation is going up this amount. So just, like a rough estimate, with the volume that I had put in here, like we could see today, we have about $11.3 million worth of value in the actual Bertha's Treasury. So that's all like backing the futures right now. But as we progress, like she's very likely to go up in to about like 263 like trillion tokens. She's going to start to collect tons of these tokens, and we're going to see, price appreciations in the Treasury, of close to like 5,000% in just that small amount of time. So the Treasuries can grow to an amazing amount of value through kind of the manipulation of this constant product formula. All right, because in traditional liquidity pools, this would never happen, because the people that hold all the tokens, they would start selling, like, oh my gosh, like I've made 500%, this can't keep going up, and they sell and they sell. But Bertha is programmed where she is going to keep buying no matter what, and she's going to be soaking up and putting all of that supply locked away inside of the Treasury. That's what makes it so ingenious and so amazing. So that was kind of like one of my big pushes was like, I want to like get people to try to understand this a little more. It's probably not going to sink in, right away, like your first viewing, but the fact that the engineering and the tokenomics can create such incredible value, that's what then allows the system to be able to offer some nice, generous yields in a very sustainable and safe way. So it's an amazing system as far as the elephant treasury goes, and backing and creating just that value and that wealth. So that's what got me completely geeking out about elephant money, and I was like, this is amazing. So I started to like invest really heavily into it, because it's science. This is how the systems work. And like it's going to happen. And what's been really cool, like a lot of the community has been saying like, oh, in this video you projected this, and it was super close. I was like, it's like, yeah, because a lot of it is based off of like basic algebra, and being able to just work with the formulas that are the structure behind how decentralized finance like works. So it's pretty fun stuff. So pretty amazing there. All right. I'm just going to stop because I've been talking for a while. I don't know if anyone has questions or anything about that. Let me see. I'll stop sharing for a little bit.
Yeah, I think we're pretty much at time. It'd be a good time to just take questions now. Yeah.
Yeah, I definitely I could come. I could come back again at some point, because I know we didn't get in depth into like futures itself. But I really thought, it's very important to understand the sustainability of something if you're going to actually like commit and, engage and be part of it. But I am going to be coming out with a lot of smaller videos on like how futures works. There are some great videos already out there, but I can definitely connect again with Nikisha to really walk you guys through the futures program as well, because that's one of our amazing new products that I'm super excited about.
Can I quickly say, EMH, that was a great presentation. One of my biggest questions, I should say almost all my questions, revolved around the math behind the protocols, and you just pulling that up, talking about the constant product formula, that all just clarified it and made sense. Quick question from me, how amenable are you to sharing your spreadsheets? Because I'd like to play around with some of those a little bit. A little bit on my background. I have a master's in finance as well. So all of this makes perfect sense. I just would love to play around. Is that something you're willing to share?
Yeah, absolutely. All of my videos on YouTube, I'll always kind of link I'll link, say, the spreadsheet that I used or the calculator that I used. I can actually share the graphs from the graphing calculator. So what I could do is I could share with Nikisha like all the like different links and everything to all those files, and then maybe she could give you guys access to it for sure.
That'd be perfect. Thank you.
Yeah, no problem.
Elizabeth, did you want to ask your question, or? Elizabeth.
Hello, everyone. I think I came a bit late, but is it a single investment or is it has to be continuous? Like if I forgot. I think it was SK that was mentioning you have to keep like putting in every 2 weeks or whatever, depending on whatever investment you want to make. Or could it be like a one time? Let's say I want to reserve it for a family member or something, or a friend. How would that work?
Yeah. So what's cool about the Elephant Money system is there's a variety of different products and everything. The two that are going to be the most successful right now would be a futures account, and that does require continual investments of $200 at whatever pace you're comfortable with. It could be weekly, it could be bi-weekly, monthly, but that's something that's kind of like an ongoing thing where you basically, what you do is you kind of build up a little steam to a point where you're comfortable with the balance, and then you can start, really extracting the value of it. If you want to make like a one-time like investment, or an investment for say like one person, or if you don't have a lot of capital right now, like you want to make an investment but it's really maybe a little smaller, just investing in Elephant token and just holding Elephant token with that price appreciation, that is also an amazing play. But that could be a one-time purchase, the Elephant token, just purchase and then just hold it, and then it will appreciate over time.
Go ahead, Liz.
Yeah, no, the question I had was, so Binance is actually not, it's made illegal here in Texas for some reason. I don't get the fullness of why, but I was wondering if MetaMask, I think it was, like works like if it was if that one was good, or if there's another one you would recommend to use.
I personally use MetaMask. MetaMask is great. And I know a lot of people really like Trust Wallet. Those are the two that I think are most commonly used with the site. But yeah, I'm also located in the US, and unfortunately, like Binance has a Binance.us site where you can buy cryptocurrency and then send it to the MetaMask wallet. The only downside there is like they put a hold on your funds for like 10 days. It's like, it's crazy. So what I had been using is crypto.com, but because I found it easier. But even then now, I really don't trust centralized exchanges all that much. So I've been looking for different alternatives. I think, others that are involved with the protocol probably have like better suggestions, but I mean, MetaMask as far as the wallet goes is great, but I found that it's challenging to like on ramp and like get people into systems because they don't make it very easy.
Yeah, just to add to that, Liz, that was a really good question. I think so personally, like EMH, I also use crypto.com. And even though I don't hold funds on centralized exchanges because of, if you know about FTX and what happened there, you could lose your funds. They're not your keys. They're not your crypto. So what I do is, I verified myself, KYC'd and everything with crypto.com, took a picture of my driver's license, all that stuff. But what you do is you just buy BNB like immediately, and then link your MetaMask account or Trust Wallet to it. And then you send that BNB directly to your decentralized wallet of MetaMask or Trust. And then with that BNB, you can interact with Elephant Money.
Got it. Thank you guys so much.
And just one other thing that I would just want to put out there is I have no problem coming back, like if Nikisha wants to, host a little meeting like every week or every other week, just for people to drop in if they have questions or if they need help. I would be more than willing to, connect and to meet up with anybody that, needs additional assistance.
Thank Well, thank you for saying that. Because yes, we are
It's
going
a
to
lot to
need.
take in. It's a lot to take in one sitting.
Yeah, it's a lot. It's a lot to take in. But also once we get away from this today and we sit around and we have thoughts, we're going to have more questions the more it sinks in. But also, maybe not everybody's ready to make their initial investment straight away, and so they might need more understanding. There might be some convincing of the husbands also. And yeah, we're just gonna have lots of like initial setup, get it going kind of thing. The other reason why this is good if we can set something up quite regularly is because we're going to be bringing in new people all the time. This is the way the ministry is growing. We're going to be bringing in new people all the time. So and a few other things as well. That makes sense that we have something where we can actually regularly check in and have the access to information and all the updates and stuff like that would be really cool. What else was I going to say? Oh, quick question about the wallets. So I actually have a MetaMask wallet, but I bought my currency on Binance and I have a DeFi Binance wallet. So how do I move everything over and migrate it? Because I actually used the Binance DeFi wallet that I've got to make my initial investment in Elephant and in futures. So is that going to mess things up for me if I now want to change to MetaMask?
No.
I don't know how to do that.
So I think, and Nikisha, I can link you to some bridges, but I think if you bought your BNB directly from Binance.us or Binance.com, wherever you're at. Oh, you're not in America, right? So what you can do is there's two versions of BNB. There's a BEP2 version, which is what you just got. And then there's a BEP20 version, and you'll need to convert it, or AKA bridge it, to the BEP20 version. And there's like a simple, a bridge site like simpleswap.io. I'll link you, but basically you'll throw in, your BEP2 version of BNB. You'll bridge it to the BEP20 version, and then it'll land in your MetaMask. No problem.
Okay, I'm gonna message you, and you can help me. I'm not gonna remember any of that.
It's very complicated. Like it really is at first. It's so complicated.
It's because it is complicated to do all that stuff, but like once you understand the pathway, it's not too bad. Like once you do it once or twice, you kind of get it. But when you're explaining it, it's like, what are you saying? How am I gonna do it? So yeah, I'll probably message you and ask for help, just walking me through that process if that's okay. Just thank you.
Yeah, absolutely. I think you really struck on it too. Like the biggest hurdle today of crypto is just onboarding people that aren't in crypto already, because there's so many different versions and blockchains, right? Like a stable coin such as USDC, it exists on the Ethereum blockchain, Binance blockchain, Polygon blockchain. And so like that term of bridging is going to be a valuable, tool to learn. But like you said, once you do it once or twice, it's really easy. And then I know BT is a big proponent of, like, if you want to set up some family members, maybe just have them download a MetaMask account, show them how that process works. And then sometimes they can just give you the funds, through Cash App or Venmo. And then because you know how to bridge at that point, you just bridge it for them, put it into their wallet. They can buy Elephant, yada, yada. So there's a number of ways to go about that.
Yeah, that's really good. Because some of us are being led to open accounts for people that we know are going to be afraid of this, but are going to need it. So yeah, we're some of us are being led to include them, even though the world is moving and they're like, no, it's moving too fast. We're going to make sure that they're on board. So that's really good to know that we can do it that way. That's really helpful. Sarah has a question. Do you want to hit the mic, Sarah? Oh, I want to know if we can basically buy coins into a wallet that's like an LCF wallet. I know nothing about this. What?
Not
So LCF, real quick, just so you guys know, LCF is actually the name of our ministry, Ladies Christian Fellowship, LCF Ministries. So that's what she's asking, if we could have like a wallet like amongst us as a mission, so that we can, do what we're gonna do. Yeah.
Yeah, you absolutely can. Like for instance, like I have like my own like personal wallet and account, and then I have like my YouTube like EMH community wallet, where so you can have, you can have different wallets. So you could have, one where it was, an LCF wallet, and then you could pool funds, and then if you wanted to, like you could run like giveaways, or have the yields be generated and put towards expenses, or onboarding new members. Like you could definitely you can have, honestly, as many wallets as you want. That's what's neat about crypto.
Not
So
only
I
that,
guess
oh, sorry. I was just going to say that security is really important too. It is simple to set up a MetaMask, but that's technically a hot wallet. It just exists on the blockchain. If you ever get compromised by giving out your seed phrase, that wallet is gone, basically. So you could do some research into something called cold storage wallets. They do have like a hardware component that is more like a master key to that same wallet. So you may want to look at that, such as a Ledger or a SafePal. And then, as EMH said, you can have multiple wallets, and we can get into it later. But if you, Nikisha, are going to set up a tree under you, there are partner aspects to the Elephant Money ecosystem. It's a modest, like 1% reward, split 50-50 between you and your upline. But you may want to have them link up to you, or I'm sorry, maybe your community wallet under you, and then you can experience some rewards on Elephant token purchases, Trunk token purchases, which we didn't even get into today, but futures as well has a that same 1% reward, which goes to your Trunk. So, but we another time.
Right. One more thing. I think for for actual organization, nonprofit such as yours, with a lot of like trustworthy leaders in it, you guys can also, you probably should, like for your actual or foundation wallet and things like that, you can use Gnosis. There's Gnosis Safe. I can send you information on that, but it allows you to, it's basically a multi-sig wallet. So when you guys are making decisions and moving coins in and out and things like that, or you can do it with quorum. So like, a vote of 3 or a vote of 3 out of 5, things like that.
Okay, yeah. All the information you can send me is going to be incredible. So please. Sarah, did we actually answer your question? Yay or nay?
I don't know. Like, I think so.
What was the question again?
Well, I wanted to know if like a LCF account could get set up and all of us have access to put in whatever we put in, freely, but then say only Nikisha and Liz have the ability to jointly take that out for purchase of something for the ministry. So it's like an accountability thing, but we all have free access to donate.
So
yes, that would be pretty easy to do. And the simplest thing to do would be to you just send the BUSD to Nikisha or another officer, and then they can deposit, or you can actually deposit the funds to the LCF account. You can deposit the funds directly to the LCF account. That BUSD will be sitting there for Nikisha to access and put into the right place. So actually, yes, you can do that directly.
Yeah, basically you would just have you would have the LCF's like wallets like address, and then you have the ability to send like any crypto that you want to any particular wallet. So you could just send it to that address, and then it would go right into that wallet, and then Nikisha could deposit it where, needed, if it was in futures or elephant or whatnot.
Yep.
Rebecca is just asking about YouTube channel. So can I ask you guys just to like inbox? I probably have your YouTubes and stuff anyway, but if you could just inbox me your channels and stuff, and I'm gonna make a group resource list for the ladies for our business discipleship group on Telegram, and so then everyone can go and like. Also, ladies, if you're not on Twitter, please sign up to Twitter. Get a Twitter account so that you can support the social media drive for Elephant Money as well, which is going to be beneficial to you, because as soon as we are supporting the posts, the public posts, other people are going to see that support, and it's going to just kind of validate and support Elephant Money doing well in that way as well. So that's another way that you can keep on top of information, keep involved in the community, and actually support Elephant Money. The more people involved in this, the better for you, the better for your investment. So yeah, definitely download a Twitter account, and then, so guys, send me your Twitter handles and all of that kind of stuff so that I can continue to like share that as a initial resource that everybody can just have access to as soon as they join our group, if that's okay. That makes more sense doing it that way. So hopefully you just have a load of followers coming in soon.
Well, not only that, but it's really important to know that everyone in this, room or listening to this recording later, you guys, you ladies are really at the ground floor of everything, because Elephant Money at the moment maybe has, I haven't checked it, but it's like $168 million, dollars assets under management. And as we grow and climb organically, we're eventually going to get in front of big institutional money. I'm talking hedge funds, venture capitalists, people that are going to jump into this and skyrocket that price, before you get it. So, this is a perfect ground floor opportunity. As we come back for a series of, conference calls with you guys, and as you dive into the Medium articles and the YouTube channels from, I guess the volunteer 5 or so that we have right now, you can really get in and dig in deep before, the future money really comes. Because I know BT has connections. He's talking to people all of the time. And this is a community bank. And right now it's as organic as it is right now. This is your opportunity to get in before the big money comes. So just a FYI.
Thank you so much. Does anybody else have